Good afternoon, everyone, and thank you for joining us. Welcome to Edelman Smithfield's Investor Day Bootcamp. We're really excited. We've got a full room here in New York, and I was just told that we've got a couple hundred people dialed in virtually all around the globe. So we really appreciate you all taking your time to join us today, what we think is going to be a fantastic event. Quick introduction, I'm Ted McHugh. I'm a managing director here at Edelman Smithfield, and I co-lead our strategic situations and investor relations practice. Edelman Smithfield is a financial communications and investor relations boutique within the broader Edelman family. At our core, we help companies, public and private, engage with the investment community. That's simple. An Investor Day is a perfect example of just that. Companies wanting to communicate with the investment community at scale, helping reset market expectations around strategy and ultimately valuation. And so while it's a great opportunity, it takes a lot of work. They're very complex. And we figured it was a great idea to bring folks together all around the world to help provide perspective and experience to teach you what it takes to host a very successful Investor Day. So we're really pleased to have you all here. We appreciate it. As you might notice, we think the look and the feel of an Investor Day is really important. And so for the folks here in the room, you may feel as though we're a bit like we're on a Saturday Night Live stage. The purpose is we want to make sure that those that are dialed in virtually have the same engagement as someone sitting in the front row. And so we thank Tribe Films for helping us produce this event. They've been a great partner, and we think we've got a great show for today. So quickly, a run of show. Our first panel, as you see here behind me, are a set of corporate executives that have all recently hosted Investor Days. They're going to share their perspective of what it takes to host a successful Investor Day. After that, we'll pivot. We'll have two very brief presentations that are going to talk about, one, social media strategy for Investor Day, and then two, how to think about video production and video content for your Investor Day. We'll take a quick break. For those that are dialed in virtually, we ask you to hang tight. We'll come back quickly with two really good panels in the back half of the session. The first is the perspective from the buy side and the sell side about what it takes to have a successful Investor Day. And then we'll conclude with a panel with two influential members of the media to talk about how to think about media engagement, both for Investor Days, but more broadly. So we've got a great event. We encourage questions. There will be mic runners here in the room taking questions. There will also be a function on the app for the virtual members to submit questions that will come to the moderators and the presenters. And lastly, I need to thank a few people. If you've ever been in this room and have hosted Investor Day, it takes a ton of work. Doing an Investor Day bootcamp takes a ton of work, particularly one to this quality. So I'd love to thank Ash Navasa, Nicole Bergay, and Lauren Grama for helping me get to where we are today. They will not be on stage, but they will be at the networking event. So if you think this has been a good event, please pass your feedback to them. So with further ado, let me turn it over to our panel and kick things off. So quick introductions to our panel today. To my left, Jared Poff, CFO of Designer Brands, Olga Levinson, head of IR at Coty, and to her left, Brian Goldberg, head of IR at Spotify. So I'm going to open up the first question to all three of you. Would love to sort of get this going. You've all had Investor Days over the last couple of months. What was the rationale for having the Investor Day? Sort of why was this the right time versus a year later or further down the line? Maybe I'll start at the far end there, Brian, if you can maybe kick it off and talk a little bit about the Spotify Investor Day.
Sure. So, the rationale for our Investor Day was twofold. One was to update investors on the progress we made against the original targets we set out in 2018 at our first Investor Day. And then secondarily, really to sort of reframe the company's opportunity and strategy. So more of a strategic pivot, I'd say. And I can get into more details later in the discussion.
Olga?
Sure. So I would say kind of in the middle of the pandemic, we had a new CEO join. So she joined in September of 2020. She built pretty much a new team around her. So the point of the Investor Day about a year later was to really go into a deep dive of the new strategy, actually offer the medium-term financial targets, which we hadn't said before. And I think, honestly, it was the opportunity to introduce the whole new team, so the bench, to the street because they hadn't had an opportunity to do that before. So really reinforce that this goes beyond just the CEO and CFO across all of our key divisions and have an opportunity for the street to interact with them.
Jared?
Yeah, so
Designer Brands?
at Designer Brands, it really was to update the investment community about the transformation going on. So if you're not familiar with Designer Brands, we had 25 years of our life being a retailer called DSW. Then in 2018, we made 2 strategic acquisitions and really got into the brand building side. And one of the biggest acquisitions of the 2 was buying the Vince Camuto company. So buying brands of actual footwear that were highly synergistic and really changing the narrative of what Designer Brands was. And so we had held our first Investor Day after the acquisitions in 2019, prepared our first collection of our owned brands for our own distribution that was set to launch in March of 2020, and then obviously the world stopped for a while. And so this was the first chance to kind of tell the story and make sure that message, that transformed narrative was getting out there.
Got it. Maybe, Brian, if I can go back to you. So we were talking backstage about Spotify going public through a direct listing. My understanding that this Investor Day was the first major sort of Investor Day type event since that direct listing. Sort of, can you give a little sort of experience about, there's a lot of companies that have gone public over the last couple of years, and I imagine they're trying to rethink, when do I need to have my next Investor Day? Can you talk a little bit about sort of that timing between going public and then having the Investor Day?
Yeah, sure, happy to. So Spotify did a direct listing in April of 2018, and in front of that, that's when we did our first Investor Day to lay out the strategy of what was then a streaming music company in 65 markets. And I think if you think about it, I mean, podcasting was a bullet point in, on one slide in a 2-hour plus presentation. So a very different company back then. Fast forward to today, Spotify's in 183 markets in music, podcasting, and now audiobooks as of last month. So certainly a ripe environment to, bring investors back in, help better align the investment community with how the company sees its opportunity, how the company invests behind the opportunities it sees, and then quite frankly, how do you model all this stuff and underwrite it? So, why did it take 4 years for us to come back and have an Investor Day in June of this year? A couple reasons. One, in 2018, we're a growth company. We set ambitious targets for ourselves, achievable but ambitious targets. And we wanted to be able to come back to the market with a deep dive on the business when we were able to show measurable progress. Typically doesn't happen in 1 year's time. So that's one consideration. And then the other consideration is, the culture of Spotify is that of innovation, iteration, leveraging the platform that we have. And in, 2019, we started to make a pretty big bet in podcasting. And that required, a good amount of upfront investment, created a little bit of a drag on the P&L, but it certainly, we had a lot of modeling and rigor behind all of those investments. But when you're going into a new market or a new vertical for the first time, one that's you're trying to reinvent or reinvigorate, you need time, you need data, and you need to learn from your initial steps. And so that was sort of one factor. We needed to get as much data and learnings under our belt to be ready to actually shine a bright light on the strategy to the street. Marry that up with, 2021, we began to aggressively plot out the next legs of our growth in both music, podcasting, but also in new verticals such as audiobooks. That was going to require a new round of investment. And we, heading towards the end of 21, looking into 22, was very much becoming an investment year. Gross margins were going to take a step backwards in a market that was increasingly focused on profitability. And so by the time January rolled around of this year, it was pretty crystal clear to management that it was time to have an Investor Day. And I'd say that we had decided in January to do something in Q2 of this year. We did it in June. We probably would have done a little bit earlier. We got a little blindsided by Russia invading Ukraine, we had to unwind our operations there. So I think start to finish, we probably really started planning late March for an early June presentation.
Great, thank you for that. Olga, if I can go to you. Cody was somewhat unique. When you had the CEO leadership change, you kind of staggered and had what I call sort of Investor Day 1.0 and then Investor Day 2.0 spaced out by a handful of months. Unique, in our perspective, I think it worked really well, but would just love a little bit of your feedback of the thinking about doing it in 2 Investor Days, maybe some of the pros and cons, and also would love to dig a little bit of between the two, sort of what did you have to do in terms of getting feedback from the market to make sure that Investor Day 2.0 was a step forward from the first one?
Sure. So as I was mentioning, our CEO joined really right at the peak of the pandemic, September 2020, build a whole new team around her. And at that point, basically, our stock price was at an all-time low, our credibility based on previous misexecution, and then obviously the hit that our business took during COVID, that was really impacting the credibility of Cody and how our stock was trading, even relative to the overall market. So our CEO built a team around her, and they basically quickly deep dived and started building out the strategy. And theoretically, we could have waited a full year, right, to finally unveil, here's the whole strategy, here's the financial algorithm, here are the targets that we're setting for ourselves. It just felt like a really long time because the strategy was built. We were just not yet ready to share specific financial targets. So what we did was, it was still in the middle of the pandemic. People weren't really having in-person events. So in April of 21, effectively 8 months after our CEO joined, we had a virtual only Investor Day Light, I would say. It was about an hour and a half, really just our CEO and our CFO presenting via webcast, laying out the whole strategy to show that we have a handle on the business, we know what went wrong, what was misexecuted, here's the strategy, here's what we're going to do, but we're not going to give financial targets. And we were kind of explicit, I was pretty explicit with all of my contacts, with investors and analysts, don't come into this event listening to it expecting financial targets. Too early, we're not going to do that, but we want to give you a sense that we have the right management team in place and the right strategy to build out, to start building out their credibility. So having set those expectations, I think it was perceived very well. Hour and a half event, about an hour of presentations and then half an hour of Q&A, fully virtual. And then people had a real sense of what we were trying to do, which obviously helped build the narrative, in the next few earnings calls. But we said at that time that give us another 6-9 months and we'll have a full-on Investor Day where we will, first of all, introduce more people from the management team, go kind of build on what we said in April. So our full-on Investor Day was essentially 7 months later in November of 21. And that's when we really went into, took what we introduced in April and really did a deep dive on each of the divisions. Here's the strategy. And that's when we finally introduced the, concrete financial targets. And I think overall, because we had set those expectations up front, that this is how we were going to stagger it, I think it went very well. It was perceived very well. I think the feedback was positive, and I know we'll talk about it later, but I think the Investor Day, because we did a hybrid, we had it at the New York Stock Exchange. We had people coming in person. It was, thankfully in between 2 different COVID waves, so there was actually, good attendance, 50 plus people, and then lots of people joining virtually. It was also an opportunity to kind of actually give immersive experiences for the brands that we have in the portfolio, because we have amazing brands and you can show a lot of slides and a lot of pictures, but it doesn't compare to actually being in front of a full-on, brand display and interact with the products and actually feel what we're making and how we're positioning that for consumers.
That's great. Jared, maybe we could build off of Olga's comments, particularly about attendance. So it had been, if I remember correctly, about 3-4 years between Investor Days for designer brands. You did it in person. You had been through a lot through COVID, and we're coming out stronger. Clearly there was a goal to get as many people in the seats as possible. How did you sort of think about sort of maximizing attendance and sort of making sure that it was as big of an event as you and Jared, or you and the team, were looking for?
Sure. We did one thing that we're doing here today too, which was let it be dual mode. So we did a webcast as well as an in-person. But then we also, we leaned upon kind of who we wanted in those seats. And so obviously you've got your analysts that cover you today, you've got your shareholders that already hold you, but we are always looking at very selective investor targeting. And so a big outreach to people that we knew either weren't in the name and should be, or were someone that was attracted to that type of a growth story, especially a brand building growth story. And so we worked with your team a lot. We worked with a couple other investment banks and really went after a more holistic type of approach and really encouraged a lot of attendance. We followed up, I think, 2 or 3 times. We had online signups so we could send them reminders and really just kind of canvassed as hard as we could.
That's great. Maybe moving things on. So we've kind of talked about the rationale for having one, and 3 very unique stories. Maybe just now starting to kind of dig in a little bit to sort of the planning. Brian, I'll turn to you. As you think about your executive bench and the business leaders, and you've got a story you want to tell to the market, can you provide a little bit of context and color on how you tried to match speakers with the narrative, and sort of how did you lead with the narrative and then find the right speakers to sort of support that, or did you kind of know immediately who you needed to speak, clearly beyond your CEO and CFO, and then build the narrative behind that? Just some sort of color, because I think a lot of companies get to that point where they say, all right, we're going to do this, who's going to speak and what are they going to say? I would love a little bit your perspective how Spotify did it.
Sure. I think for us, maybe it was a somewhat unique situation because I think it had been a while. Our strategy had really evolved since our last Investor Day. And we really needed to bust out of this mold that we'd been kind of cast in by the street, which was, your subscription, you're like Netflix. And when in reality we're operating sort of multiple business models in music and then scaling them and then stepping those business models into new verticals like podcasting and audiobooks. So our goal was to really reframe how people think entirely about our business and our story. So that being said, we needed to develop the narrative first rather than just going through the org chart and saying, all right, this person's got to speak and this person's got to speak. And that's essentially what we did. I think nailing the narrative first is key, and then it becomes very obvious who the right spokespeople are in the company.
Great. I don't know, Olga or Jared, if you've got any sort of additional perspective, how you thought about speaker lineup and building the narrative, would love to hear about it.
Yeah, one of the things unique for our transformation is really the changing of even how we approach business. And so while we still are publicly reported under three distinct operating segments, the reality of where we are going is a much different one, and it's more around brand building with guaranteed distribution. And so the natural leaders who you might have thought would have been up at the front weren't the people necessarily that were the people who commanded those particular functions. And so we did have to, I think, start with a narrative first, but then really think about who did we want to convey that message, because it wasn't necessarily all housed in one of our single verticals or reported segments. And I know we talked about earlier, we actually made changes, kind of midstream to say we thought it would be best represented by this person, and lo and behold, no, it probably is better. It feels more natural and more passionate sometimes to come from someone else. So it was a little plug and play.
Yeah, I remember that. I'll stick with you for one more question, if you don't mind. Most times you set an Investor Day, I know Designer Brands did, 3 to 6 months in advance. And so you've got at least one, if not 2 earnings calls between the time you decide you're going to do this and the Investor Day. I know you put a lot of thought into making sure that those 1 or 2 earnings calls kind of built momentum around the narrative so that when we got to Investor Day, it kind of felt like a fluid sort of story. Can you talk a little bit about how you sort of did that and some of the focus you did on those 2 earnings calls leading up to Investor Day?
Yeah, I mean, really, we knew we were landing with a message that was going to be boiled down to two key takeaways, and that was doubling of our own brand sales and maintaining of our national brand sales. And so we wanted to always make sure that was being infused. So we started that, as you mentioned, 2 or 3 quarters of earnings calls ahead and started introducing that just so it wasn't something brand new at Investor Day. And that also sparked a lot of questions to say, well, that's great, but I can't find that in how you report your numbers. Sure. And so one of the things that was exciting for a finance person, I guess, but also for the analysts, was to let them know that at the Investor Day we were going to have, we would start also providing a different cut of our revenue. So while we still publicly report it as a very distinct way, we also started supplementing from Investor Day forward a recast of our sales broken into those two types of way, and that really helped to move their understanding to where we want to, so much so that, I was just at a big marketing event on the West Coast 2 weeks ago. Every single meeting started with questions about that and those two messages, every single one, versus the traditional retailing questions that had been, for years and years and years.
That's a really interesting point. Olga, I'll go to you. Remember, you've built the narrative. You're getting going on the deck, and now you've got to kind of make sure your executive team and presenters are ready to tell the story. If I remember correctly, Cody has executives all over the world, different nationalities, different ownership of different business units. How did you get them all ready to speak to a core narrative that is Cody, but also represent their ownership and their responsibilities of the business? How did you kind of get them all singing from the same playbook before Investor Day?
Yeah, so I think having that Investor Day light, so to say, already kind of set the template for what is the narrative, what's the strategy, and the goal is to kind of build more on it as opposed to reinvent the wheel here. I think, and it may differ from company to company, but nearly all of our executives, they were new to the street. They had never done an Investor Day before. So, they know their business, they know their area of expertise, but they don't know how to talk to an investor and analyst audience. They don't know how much detail is too much versus too little. So I think what helped, beyond sharing kind of initial, so I think when we kicked off the process with the individual speakers beyond the CEO and CFO, I think, the connect that we had together with the Edelman team was really to help frame, well, this is this is how the investors view your area. This is the areas of skepticism. This is where we get the most questions. This is what they don't understand. This is where you're going to get the pushback. So kind of you understand yours, but this is how they view it externally. So once we did that, and then they kind of had an opportunity to provide their input on those areas of questions and skepticism, et cetera, that's when we kind of centrally came up with a sort of an outline or a framework, which we then sent back to them, and then they worked individually with their teams to build their presentation. But at least they had kind of like the guardrails from our team around what they should focus on, what they shouldn't focus on, what kind of messages would actually land with this audience, because it's a very different audience versus, customers or retailers or et cetera, et cetera. So I think that was kind of the framework, and then there was just kind of a reiteration loop around, once they would send us their versions, we'd come back with feedback, and only once the presentations were really finished, that's when kind of worked on the script. So that was kind of the sequence of the preparation.
Brian, if I could go to you. So I believe you said your Investor Day was June. Mm-hmm. Is that correct?
Yep.
So I would presume you had an earnings call in August or late July, early August. If my fiscal calendar for you is off, I apologize. But assuming you had an earnings call afterwards, how did you kind of keep the story going, right? You put all of this work into this Investor Day, and then it's done, and then you've got to continue to have disclosure to the street. How did you kind of continue that momentum? Jared made a good point about sort of additional disclosure after Investor Day. Did Spotify do anything different on their earnings calls, or how did you kind of keep that common theme going?
Yeah, it's look, it's very much a work in progress still. We have only had our second quarter earnings call, which was a little over a month after we made a big presentation where we also provided new cuts of our business so investors could better understand sort of the progress we were making on the original strategy and then starting to be able to think about the new strategy. Company is still runs the same way though, so we haven't changed our reporting segments, which needs to map out to how management runs the business. That being said though, we want to be as helpful as possible, and we want to be as transparent as possible with the business. So we did take this second quarter as an opportunity to revamp and redo how we present earnings. And so historically, Spotify had done sort of a very traditional shareholder letter format with a couple charts and some financial tables. In the second quarter, we actually converted that into a shareholder deck, which is sort of a hybrid of an investor shareholder letter and lots of visuals and lots of new cuts of our financials, but also a lot more transparency on the product, the technology, and the business to sort of shine a better light on that part of our business. We're currently evaluating right now how and when is the right time to provide updates to all the new metrics and views of the business we provided in June. Obviously investors want it all, and we have to balance that with how you run the business and what the SEC requirements are. But we're working hard on that. And then in terms of the narrative, we are of course trying to continue to carry the torch, if you will, with respect to the relentless focus that we have internally, but also we tried to convey at the Investor Day about everything that we do in terms of investment or new product or innovation is all around stimulating or creating new customer lifetime value or boosting customer lifetime values. So every time we have a sort of a learning example we can point to externally, we will, with respect to we did this to create this type of favorable LTV situation. And then obviously we've elevated in our earnings just the free cash flow profile of the company, because that's something that's fairly unique to a streaming entertainment company right now. Most of the streaming entertainment companies do not generate free cash flow, and Spotify uniquely does. So we've been trying to elevate that and elevate the importance of that as well.
That's great. I'll stay with you for a moment, if that's all right.
Sure.
I think you used the word innovation a couple times to describe Spotify, which is not surprising. But I imagine that you wanted to kind of give off that culture of innovation at the Investor Day. You have slides, you've got your typical sort of table stakes presentation. But my understanding was that you had some creative ideas to kind of elevate the brand and the innovation feel of Spotify at the event. Correct me if I'm wrong. Assuming, how did you do that? What were some of the ideas that sort of how did that translate to the day of?
Well, look, ultimately, Spotify's got a fantastic communications and events team internally. We are a pretty big stakeholder in the music industry, so we do have that capability internally to sort of put on a very professional looking event. So kudos to them for creating a very great looking event and feel, and it's up on Spotify right now. If anyone's really having trouble sleeping at night, you can dial up Spotify Investor Day and you can either watch it or listen to it. I think a lot of it is showcasing the product and sort of what's next. It's something that's doesn't easily come across on an earnings call, for example. So an Investor Day is actually a great example or a great opportunity to showcase the product, what you've done, et cetera. So we did have some of that. We had hoped, at one point we had brainstormed of having breakout rooms where you can get product demos and stuff like that, but quite frankly, due to space limitations and our general compressed timeline in general, we decided to not pursue that this go around. But I think it's an opportunity for us next time. But I'd say that those are sort of the major opportunities.
Jared, if I can go to you, I know you used one of the exchanges for your Investor Day. You as well as Cody have a great brand products that you wanted to kind of showcase. Can you talk a little bit how you worked with the exchange and also worked sort of internally to make sure the feel of the event really told the designer brand story?
Sure. We did utilize that exhibit hall, I forget what the name, Stadium Hall or something, right outside of the presentation hall, and that allowed us to set up shop-in-shops of each of our brands, and so we were able to really highlight that. In addition, not coordinated on purpose, but it was able to be leveraged. There was a Vince Camuto shop-in-shop right up in the Vince Camuto pop-up shop right here in the Meatpacking District that we were able to incorporate and invite some of the attendees to and to stop there and experience a fully immersive type of of branding experience already happening in the neighborhood. And then not at this Investor Day, but the one we did back in 2019, we also on the day, actually at this one we did it as well, the day before we invited any of the attendees to our showrooms up on 56th, and those are all very branded. Each brand has a separate floor, and it allowed us to really walk them through our brand building credentials and the ethos of the brands themselves. And I thought it was a good complement to just a standard kind of financial deck.
I bet, yeah. And Olga, it sounds like Cody did a similar sort of structure. I know you had an event the day before as well, and then had a product showcase. I know you put a lot of thought into it, I remember. Can you talk a little bit about how you executed that for Cody?
Yeah, so I think beyond kind of the traditional Investor Day portion, the evening before we did a cocktail event with the management team, which I think was a great way to, again, these are new leaders that the street hadn't met before, so this was an opportunity for them to kind of actually develop a dialogue, but then know not to ask business-specific questions, because that was all coming the day after, so it was a nice way for all of them to be able to say, we'll talk about it tomorrow. So I think that portion was around introducing the bench, but then in terms of the immersive experience, I mean, Cody is a beauty company, so we have perfume and cosmetics and skincare products across, high price points, low price points, and lots of different retailers all over the world. And oftentimes, some investors do the work and they'll go into a Saks Fifth Avenue or Macy's and interact with our products, but most of them don't. So this was a great opportunity. We did our Investor Day at the New York Stock Exchange. The beauty of that is that they have multiple rooms, and to Brian's point, we have amazing, merchandising people. So they were really tasked with bringing to life 4 of our brands, and they did a phenomenal job. So lots of coordination. I mean, a little expensive, but I think ultimately very well received. I mean, literally shipping a Gucci cosmetics boudoir from Milan, but setting it up, and it was gorgeous. And we had the beauty advisors there, answering questions and applying the product. And particularly our female investors and analysts spent, a good hour, smelling products and putting them on. So I think it really, going back to the point of things that you can't really highlight during an earnings call, this is an opportunity to bring, your brand or your company to life.
That's great. I've got a couple more questions I want to dig in on guidance, but I also want to open it up for questions momentarily. So if you have questions, please prepare them. And that's also for folks dialed in virtually. If I could jump into guidance and disclosure, I know we've kind of talked about some of this, but Brian, would love to kind of get your perspective on what you were trying to achieve. My understanding is you disclosed some additional margin level information that you hadn't done historically. But talk a little bit about sort of what you were trying to achieve in terms of giving more disclosure and particularly forward-looking guidance. How did it land, and sort of what was the thought process going into it?
Yeah, happy to. So at our original Investor Day, we provided long-term operating goals for revenue growth, profitability, aka gross margin, and one or two other items. And we characterized them as long-term goals. And we never actually defined what long-term was officially for the street, for better or for worse, before my time. But I think what happened, and it hopefully came across in my earlier answer, was that the strategy evolved. And so the targets were for a different strategy, okay? So just music only. And as we got into podcasting and started to invest to get into audiobooks and other stuff, it was, and we didn't change the way we run the company. We didn't change our reporting segments. It became harder and harder for people to see what was happening with our music business. And so that's why we did a new kind of cut of our business at the Investor Day to basically, instead of looking at our reportable segments, which are premium subscription revenue and ad-supported revenue, we cut it an entirely different way by vertical, so people could clearly see, oh, this is your music business. Oh, and this is how you've actually been progressing against that original goal you put out in 2018. And by the way, the margins were meaningfully higher than what the street thought because they were being obscured by our podcast investments. So that was the goal behind it, and I think I think it served us very well. It's given people a lot more confidence, because one of the things that people wrestle with or debate around Spotify is, I think most people would agree it's a great product the debate is still out there as whether or not it's a great business. And the great business really centers around profitability in music. And to be able to come out and sort of take that bare thesis off the table, if you will, and show that actually, hey, we've come a long way and here's how we got there, that was an important first step. The next step was really to provide disclosure around the podcasting vertical as well, to help people understand how much money we're actually making there, and then what our sort of gross profit drag or loss really is, and then put some targets, hard targets with real timeframes around it, like when we expect to break even in this amount of time, when we expect it to hit 30% gross margin in that amount of time. So give people some real inputs for their model to understand like the real swings in our business. So that was the goal, very much appreciated, and I think very well received by the street. As I mentioned earlier, 22, I characterize as an investment year for the company. So we're very much in an investment year, but I think everyone's interest is peaked and people are looking for execution now in terms of progress on the margin.
That makes sense. Jared, I'll turn to you. And you talked about it a little bit earlier, but you used the Investor Day to provide a bit more segment level disclosure, and then you gave long-term guidance targets. Love your perspective. Also would love to understand sort of once it's out there, sort of one, how did the analysts react to it? And then how has it kind of shaped valuation approach? And did it achieve what you were trying to achieve in terms of getting the analysts to get in line with what your vision and your expectations for the business were? Yeah,
it's still evolving, but I would say there is absolute traction being made. As I just mentioned, coming off of a trip out west for a marketing event, every single conversation started with the messaging, the doubling of own brands. They understand the message that is the growth part of the business is great. And from a valuation standpoint, as anyone can guess, I mean, owning brands, you get a lot more multiple on that than just retailing other people's brands. And so the fact that is where the growth is, the fact we're able to back it up with this new cut of sales that shows the traction that is being made, that the long-range targets are very easy for them to understand. It was the doubling of own brands within the 5 years and what the glide path is to get there, and then making sure you deliver. And so it really has simplified the message. We now give them the info to put into the models, which as simple as that sounds, it's so core. Like if they have to go digging, it's not going to get in the model right. And so making sure you're handing that to them the way that it can, and then just constantly using that as your talking points. It really has been very successful.
That's great. Olga, I'm not going to let you off the hook on discussions around guidance, and so I'm sure that's one of your favorite topics to discuss. But would love your perspective on kind of how Cody handled it. I think you talked about it previously. First Investor Day sort of set the tone, no long-term guidance. Disclosed it to the second one. Sort of what did you disclose? How are you still utilizing it? And sort of any tips and tricks or lessons you've learned sort of coming out of your Investor Day?
Yeah, so I think obviously it was very helpful for our little Investor Day light to set expectations ahead of time that we were not going to provide any sort of financial guidance. So that sort of set the tone. But obviously we needed to come back to the street with, okay, here's the strategy, but what does it actually translate to financially? So by the time we did our full-on Investor Day in November of 21, that's basically when we set out medium-term targets, so kind of 4 years out, but then also kind of an algorithm, a growth algorithm for revenues, EBITDA, EPS, kind of deleveraging, even beyond, 2025. So, I think the learning or, what was interesting at that point, because Cody had a very spotty history of execution relative and performance relative to kind of our key peers, the targets that we set, were not maybe as lofty as necessarily some of our peers or more in line with them. I think there are a lot of questions around, well, can you actually do it, right? You haven't had a history of doing that before. What's changed now? So I think there doesn't mean that you need to necessarily set them lower, but it just meant that the onus is on us since setting those targets to execute on that. So people were looking, we have a June fiscal year end. Obviously, people were expecting a good year, for the year that just ended, and they were all looking for the guidance that we would set this year as kind of the first year of a proving point. We've given, solid guidance, kind of ahead of where people are expecting. So I think we got a check mark there, but now the macro is the big concern. But, I think ultimately, our management team was very conscious about setting targets that were both ambitious but credible, right? And also giving lots of different ways of cutting the medium-term algorithm to give confidence how it was built up. Because I think just putting numbers out there, investors and analysts would have said, okay, what is this based on? Is it kind of like going like this, and we cut it geographically? Here's the buildup of how we get there. Here's how we do it by category. So lots of different ways to give confidence that this is actually achievable for us.
That's great. I appreciate the context. So I'll stop asking questions for a moment, and I'll turn to the audience. If we've got any questions, please raise your hand, and we've got two folks with mics.
So is it on?
Yeah, you're good.
A lot of work goes into the investor day, planning, executing. How much do you feel, and a lot of information is shared, a lot of it's sometimes new in the day, new concepts, new strategy, new guidance. How much after the day is over do you feel like you have to reinforce or explain? Brian, I personally was at the Spotify Investor Day. You talked about the Spotify machine. You had new guidance framework, but I'm sure there was similarly new things at the other events. Do you think investors get it 100% at the day? Or sitting in the seat, do you feel like you have to reinforce, retell, next earnings, summarize? Can you speak to that?
Sure. I mean, I having been an analyst in my previous career, I have a great respect for everyone's intelligence. I think what you're up against, so yeah, generally people understand what you're presenting. I think what you're up against is just fragmentation of attention. And it's just like, everyone's covering so many companies. To be able to get them to focus on you and really digest it, that's a big chore. And that's where, the concept of sort of the wall of sound comes in, where you just have to keep just driving it home. And I still, what month are we in now? October? Well, we're in our quiet period. But in September, I was still doing calls. Like, walk me through what you said on the Investor Day again. So, it's still very much, there's a lot of reinforcement and repetition that goes into it. And even as we're sitting down now to talk about our third quarter earnings call, we're already talking about what points or themes from the Investor Day do we weave into the quarterly report that we'll release at the end of the month. So it's an ongoing process, and I suspect we'll be doing it for several more quarters, actually.
Yeah, one of the things I would say, I felt that I evolved to, from the acquisitions to the first Investor Day after the acquisitions, and the second one was having to acknowledge what was clear to me, or really anyone else in the business, was anything but that to someone looking from the outside, especially with fragmented attention ability. They are covering so many people, and when there is not a direct analog to your business, which for designer brands there isn't. There's not an already existing model that they can just plug 4 things from the P&L and put it in there. So really having to be, and Edelman actually did a great job at being kind of do you think they really understand that, or should you go into a little more detail, or more importantly, less detail on certain things? And so that's one of the things I think is most important, is just acknowledging it's not as clear as you think it is, because you're in it every day.
Yeah, I would kind of add to I think all of the common sentiment about fragmented attention span, and even if people focused in at that point, they'll forget it 2-3 months later. So I think what we've been focused on in our earnings calls is we spend a piece of time, talking about the results, but then half of the call in terms of prepared remarks is actually like a report card on our 6 strategic pillars. Like, here's a strategy we laid out. It's around 6 areas, and every single quarter, here's the progress that we've made, like every single quarter, because then that's just a way to show that we're making progress, but also it reinforces this is our strategy, right? We keep repeating it again and again and again.
Jared, I recognize this is a bit of a leading question since we worked on this
Hi,
together.
Ashley.
Hello. When it came to the look and feel of the day, that was something that you and Roger focused on a lot, and that tends to take a back seat, I think, just because there's so much hardcore data that goes into an investor day. Can you talk a little bit about the process of how the visual representation of your company was coming through in that, and how that was received by the analyst community or influenced how they were feeling about your story?
Yeah, it's something we struggle with every day, and that really is the transformation of going from being a brand of brand retailer. So think Walmart, think Target, think Macy's, just someone who for all of their life, their value was created by somehow being in the middle, to now your value is being created from owning brands. What you do as a brand is very, very different. It's sexier. It's all the fun stuff Olga was talking about. It's podcasting your things that Brian was talking about. That's not what most retailers would sit up and say, this is what I want to do. Retail is detail, as they say, and that's usually what retail did. So for us, it continues to be, but at Investor Day, it was very important. We were seen as that is where all the growth is coming from, and we're being very successful at it, but that is where it's coming from, and it's a different image, and it's why brands are valued the way they are versus retail, and that is the ultimate objective for designer brands. And so to answer your question, that was intentional, making us get out of our own head and say, if we were only Vince Camuto or Jessica Simpson or Lucky, what would we be doing instead of just being designer brands or DSW as the retail side, and kind of approach it that way, and using outside help for that along the way.
Want to go back quickly to everybody's favorite topic, kind of these long-term targets that you all gave out. I'm curious, particularly in the current environment, how are you helping folks bridge the gap between potentially a more challenging near term and getting to those long-term targets? And have you had to do a little bit more of that recently in follow-ups?
Yeah, I can start. The way we put out our 5-year targets were really built on, again, two very, very simple pillars, and the one is the doubling of our own brands, primarily through our own channels. So significantly more in control than having to rely on other things. And so we felt they were very achievable. We very purposefully did not build in must-dos, like from an SG&A standpoint. We knew there would be years of investments as we are building these brands into brands, so we wanted to be cognizant that this wasn't a story that had to be built on those types of things happening. And it has allowed us to stay very, very pure to the message. Even in, right now, any call that I take, any meeting that I have, the first thing, other than the question about the brands, the first thing they want to know is what's going to happen to the consumer this fall. Like, they're all apparently never going to walk out of their house and shop again for this fall. And so what's going to happen? And we feel really good that because the things that are driving our growth are the things that are in our control, we can stay very true to that message, and just as reassuring as you can be. It helps significantly that ever since Investor Day, we have very consistently beat consensus, and so that's giving a little bit of air cover on that front. But you just got to repeat it, and hopefully it's in your control.
I can jump in. I mean, at least with us, I totally appreciate the business model that the investors have. So we're roughly 90% subscription revenues, Spotify subscriptions. The balance is advertising, which is very cyclical and exposed to the economy. So I'd like to think we're relatively, no one's completely insulated, but relative to other media companies, hopefully we're decently positioned. But I'm dealing with investors right now who want to know, 1 week, oh my God, is everybody disconnecting and churning out of Spotify because of the economy? And when we say we don't see any changes in our business, then the question comes right back, well, when are you raising pricing? So it's just like very schizophrenic market. That being said, with respect to our long-term goals, which we have now clearly defined as 3 to 5 years, which really evolve around revenue growth during that time and gross margins of the company. Obviously, people want to know how those are impacted under a stressful macro environment. We haven't provided any updates to that. All I can do is talk about puts and takes. Here's how to think about the nuts and bolts of our model, and just refer people back to our last public commentary on second quarter earnings call with respect to what we're seeing, or quite frankly not seeing, in the macro environment.
That's great. Thanks, Brian. And I believe we are at time. So please join me in thanking Jared, Olga, and Brian for a great discussion. And I'll ask you all if you could step off, and we'll welcome the next presenter.
Thank you.
So as they exit, I'd like to welcome my colleague, Jordan Hunt, who is an EVP here at Edelman Smithfield and leads our digital practice. And he's going to take 15 minutes to walk through how to think about digital strategy for your Investor Day. Here he is. Here's the clicker.
Thank you, buddy. Good afternoon, everyone. How's it going? Good afternoon, everyone. How's it going? Great, great, great. As Ted said, I'm Jordan Hunt. I co-lead our digital practice here at Edelman Smithfield. We're going to talk about optimizing your digital strategy with optimizing your digital IR strategy. So, first thing we want to talk about is, I'm going to start off with a grand statement. To meet your core stakeholders where they are, companies must use owned digital channels. Edelman Trust Barometer Survey results show that 89% of investors consult a company's social media profile. 87% of investors consult a company's executive's social media profile. That's a large percentage of your audience. Now, that being said, let's talk about specific channels for your company. First, before we talk about those channels, we want to talk about some do's and don'ts. And this is the compliance part of the conversation. It's going to be short, I promise. So the first do is work with your legal team. I'll say it a second time, work with your legal team. The second do highlight any key disclosures. It's going to be very important that you highlight key disclosures across your social channels. The first do not distribute content inconsistently. Don't do Twitter for one event, then go to LinkedIn for the next event. Keep it consistent. And that consistency might mean you do Twitter and LinkedIn every time. The second do not, this is a bit of a general rule. There are exceptions. As with every rule, there are exceptions. But this one particularly, do not use Instagram and Facebook. That's just not where, one, a lot of your core audiences are. So that's a general rule again, but we find that Instagram and Facebook do not perform as powerfully as LinkedIn and Twitter. So when it comes to LinkedIn, LinkedIn is the largest professional social media network. You have to maximize the professional value that's inherent in that platform. Your target audience, they are there. Chances are they're there, they're following you, and they want to hear from you. Secondly, Twitter. Twitter, you have to capitalize on the real-time nature of Twitter. Twitter's fast. Twitter's perfect for an event. You can post everything you want to. You don't have to really be selective. You can post everything on Twitter and just keep it rolling in the feed. One of the values of Twitter is that's where a lot of your media will be. So great Twitter and LinkedIn. So we've covered the who, we've covered the where. Now let's cover the what. What are we posting? So when we think about an IR event at Edelman Smithfield, we think of it in sort of three different sort of lanes, a 1.0, a 2.0, and a 3.0. 1.0, these are event announcements and static graphics. Many of you are already doing this. Great. Pat yourself on the back. It's awesome. Thank you very much. 2.0, This is really using infographics and data-driven visuals to tell a story. Some of you are also already doing that. The key part here is these data-driven visuals, they can distill complex key points and key messages into something that's snackable and that's easily digestible, particularly when it shows up in someone's newsfeed. When they're scrolling, you want to stop them from scrolling, right? And especially if you have a dense message, a visual is a perfect way to stop them from scrolling and to really understand what you're trying to communicate. Digital 3.0, this is using video, animations, and complex motions. This is the most visually arresting thing that you can produce during your Investor Day. With these complex motion graphics, have you ever scrolled through your feed and seen something that's moving, what was that? And you scroll back? I do that almost daily. These are the types of graphics that we're talking about here. So Digital 1.0, it's a baseline tactic. Again, many of you are already doing it. Thank you very much. 1.0, you're talking about the posting of, here's a card for the event is happening on X date. Pretty low lift. 2.0. It's a better tactic. This is everything in 1.0 plus infographics and data-driven content. This really works to distill those complex messages right down so that people can really understand what you're saying. Oftentimes, you're not going to have a lot of their attention, and you will have a lot of messages to tell. 2.0 really helps get those messages right to the forefront in people's newsfeed in digestible and snackable ways. 3.0, I love this slide. 3.0, the motion here, I just want to stop and stay and watch it all the way through. 3.0, it's everything in 1.0 and 2.0 plus these compelling motion graphics. If you see here, you see there's a quote card in the mix, right? You see that there's another graphic sort of telling the brand message, the story. And then if you see in the lower right corner, you'll notice that there's a microsite. A microsite is when we think about an IR event, a microsite is about the experience. Experiences matter, and you want to share the experience. When someone's listening to you and you have them as an audience, you want to give them an experience. People will remember the experience. A microsite is a perfect way to share and show someone the experience of your brand. How we execute at Edelman Smithfield. We lean into IR events in a way that we think is very different from our competitors, and we have a practice, a way of working with this. And we have it in a three-phase approach. Phase 1, strategic planning. This starts about 2 months out. And we know that you've already been working, it's just digital comes in about 2 months out. At this phase, this is where we conduct an audit of your social channels. We start to look at what content you've posted before, because we don't want your investor event to feel and look dramatically different than what you've done before. It needs to feel the same. So we conduct an audit, and we come with findings. And we develop a strategy that's going to be integrated into not only what you've already done from a brand perspective, but also what we're doing for the IR event. It's very connected. Phase 2, this is content development. This phase is what creatives in digital tend to call, where are the brand guidelines? So during this phase, we sit down and we say, what does the content need to look like? We get the transcripts, we get any other key messages, and we start to ideate and create content to make sure, 1, it fits and flows with the narrative, and 2, to make sure it aligns with your brand standards. This is also the phase where you may need to tap in some of your in-house creatives and say, hey, can you look at this? Can you gut check this? We will help and work with clients to manage that creative. We are happy to manage that flow of that creative and working with your in-house creative teams and be iterative. This is really the phase where we want to take all the pressure off of you so that we can develop the best content possible. Then phase 3, This is really comprised of pre-event, mid-event, and post-event. This starts traditionally around 2 weeks out from the event. And this is the phase where it's the phase where a lot of questions are asked when you may say, we should have thought about that, but good thing we're thinking about it now. Like, what's the cadence? When are we posting what? Who's posting? Who's going to be the person posting? That's the question that we get most often. Who's going to actually post this? This phase flows not only before, but also after. This has a long tail. The tail of this is, it helps you sort of have that narrative and extend that narrative throughout and beyond your investor day. Because the investor day, it's a watershed moment. It's a true watershed moment, but it's a moment in time. And when you think about the narratives and the messages that you're telling on that day, you're gonna need to extend those narratives and messages throughout, probably to the next quarter. And so for that, what you'll want to do is make sure that digital is involved so that you can have a plan and a channel and a distribution model for how you're going to continue to talk about some of the things that you highlight during that investor day. And this happens all during phase 3. With that, we will open it up to questions. Quiet group. Quiet group. We have a question here.
When you talked about who should push out the messaging, I'm assuming you didn't just mean like what human. You meant at what role of the company or what message is that sending. I'm assuming that's what you mean. So like in a case of Investor Day, would it be the presence of the CFO? He's obviously not going to do it, but is that what you mean? And can you explain a little bit about your thinking behind that?
Good question. Great question. Did everyone hear that question? Okay, great. The answer is we actually mean everything. There's, which executive is going to actually post? And what is that executive going to post? That's certainly probably the biggest question. And we create a content map, a content calendar, and it runs, generally we create content calendars that run for a month. This is a robust content calendar that runs for a day. It's fascinating to look at. But we create a content calendar, and each executive and the company page, they're also all outlined as who's posting what and when. And it aligns and correlates with what's happening during the day. There are times where we've worked with clients who will say, let's wait until the day is done and then let's post content. And then there are times when we have clients who will say, let's do it real time. The real time is definitely the hardest, but that's also where the content calendar comes into effect and is really important. In terms of the who's going to post, that's also a question. Is that the brand social team who's running the social channels? Is that IR? Is that comms? Who? And then it becomes who has access to post? And those questions are then who needs access? And so that's where we can help and assist. Sure. Any other questions? Yeah.
Thank you. How do you think about measuring engagement and really figuring out if people are engaging with the post and how they're kind of driving through the click-through rate of what you're spending time and money to do on this?
Yeah, great question. Everyone heard that question, yes, on the side of the room? Awesome. So how do we measure engagement? We measure engagement based on interaction with the posts. We measure engagement based on sort of the one metric that we love to look at is first we look at what did we post, right? And the thing about measuring engagement, it's oftentimes a thing that's really difficult to do in the moment, and we have to wait a few months out to see what the lift actually was. Particularly with content that has a message that may take a moment for us to see the results. We tend to think of an IR event as being we're going to tell you a bunch of things right now, but then later we're going to show you. And that's the long tail of digital. We can use digital to tell on the day and then show later. And the show on the later is really when we look at, okay, we said this thing on the IR event, on the day of the IR event. Now we're going to start to continue that narrative and continue those themes and continue to talk about the things that we talked about and see the engagement that those things get and look at the content and the sentiment and seeing if we're holding true and seeing if the audience remains engaged. One other point on engagement as I think about it, most companies do not regularly integrate IR content into their regular sort of Marcom social media. Another way that we think about engagement is now is this the moment to integrate some of this IR content and event material into regularly scheduled social media content. And if that answer becomes a yes, we consider that a win, right? Because you're now changing, not only are you changing sort of what consumers and your customers and your investors are going to see, but you're also changing minds internally. And they're saying, oh, this is of value. This has value. We need to start talking about these things. And oftentimes we find that having the internal conversation that changes people's minds is a huge win. It's a win that you sometimes can't put a value on, but it's a huge win as well.
Hello. How do you think about companies that don't have a big, let's say, brand consumer presence? For example, like the companies that we saw in front of us today, but maybe companies that are a bit less glamorous and maybe consumers don't really know the brand. They just interact with a company in a different way. How much is too much, or which would be a good strategy to approach social media and Investor Day to maximize the impact?
Yeah. We tend to look at them and say, everyone has an audience. And in the upfront strategy, that's when we're looking at and saying, how big is your audience? And we let that kind of guide how, the breadth of what we need to produce, right? And really understand what are we communicating to each audience and the broader audience. So we let that be the guide, because if you don't need to create 100 pieces of content, don't create 100 pieces of content, right? But if you need to create 5, or if you need to create 100 pieces of content, creating 5 won't do it. So what we do in the strategic upfront is we look at how big is the audience, and we let that drive a lot of the guidance and decisioning around what we need to create. Yes.
My company is starting a company, and we are not known. Hello?
I can hear you.
You good?
Yeah.
Okay.
Yeah.
So I tried to host some webinar to introduce our technology to U.S. market.
Mm-hmm.
And then, but our company is very new, so nobody knows. Mm-hmm. But we are very confident in our technology. Mm-hmm. So I tried to host webinar, but I don't know how to attract audience. Yeah. So can you give me a tip?
Of course, and I know we're at time, but I'm going to take this question. Sorry, Ted. So I would say for you, digital is going to be very important because, like you said, you don't have an audience. I think digital can be the way where you start to attract that audience. I would say at the start, don't worry about, and I know it's hard, don't worry about having a big audience. I think what's important is that you make sure that you're communicating your message and you're communicating it clearly and using digital to do that. Because once people start to understand what your message is and understand what your technology is and understand how it's relatable, then they will start to follow.
So you mean just starting?
I think just start. That's the thing. You got to start. Yeah. And digital is a great testing ground. Use digital as a test and learn. Yeah. And if you're already doing webinars, you're kind of checking box 3, right? You already have the video content. So there you go. You can do audiograms from the webinars. We can talk later for sure. I'm sorry, I have lots of ideas. So yeah. Okay. Thank you all. Really appreciate your time.
Thanks, Jordan. So before we go to break, we've got one more presentation that I think you'll find very valuable. I want to welcome Michael Spienza from Tribe Films. Michael's firm is the group that put on what you're all looking at here in the room and ideally engaging with on your screen at home. And so Michael's going to spend a couple minutes talking about how to think about video content, both the production, but also the content that goes in the Investor Day for a couple minutes. I'll turn it over to Michael.
Thank you, Ted. Afternoon, everybody. Ted McHugh and the Edelman crew, huh? Yeah, let's have some fun. All right, thank you all. My name is Michael Sapiens, and I am from Tribe Films. Tribe is a full-service production agency. We're based in Dallas, Texas, and have offices in Chicago and New York. And we produce content. We produce it all. We are specialists in corporate communications, investor relations, investor communications, special circumstances, pre-IPO roadshows, investor days, both live, in-person events. We also do headshots. If it involves a camera, we make it. Commercials, TV commercials. We shoot things from a single headshot all the way up to multi-million-dollar TV commercials. And we are one of Edelman's premier and preferred production vendors for investor days. So let's talk about what we're talking about here today, right? What does it mean? What is an investor day and what has happened, right? Well, COVID changed everything. I mean, not just the obvious stuff, right? COVID changed everything. We've heard that 1,000 times over and over again. But what does that do and how does that relate to us and what we're talking about here today? What it means is your analysts are interacting with you and your investor days in a totally new way, right? They have to be brought in through live. It is a hybrid world. That's what we're talking about here. Hybrid live events, or that's the world. So Ted asked me to sort of do a 10,000-foot look down onto this and get right to questions because it feels like this is one of those worlds that's kind of new to a lot of people. Not everyone's done an investor day through COVID. So let's get to that really quickly. Top level though, what is a hybrid event? A hybrid event is what we're doing right now. It's a in-room presentation, a live presentation, right? With an online piece, right? A streamed portion out. And that allows you to take your investor day, stream it to the world, get it to a larger swath of analysts all over the world, allowing them to interact with you and engage you without having to put on pants. Because that's really why they don't want to come out anymore, right? At least that's what we're hearing. No one wants to put on pants. No one wants to go back to offices anymore. Well, all right, great. Now we can get to them. That's important to engage them. Lucky for you, there are really two great new ways to engage with investor days and engage with your in-room audience or your online audience, one or the other, both together. I'm going to talk to you about those. Let's see if I can learn my clicker here. Nope. Oh. Well, we'll leave it over. Back? Okay, well, it's just my pretty picture. Enjoy it. All right, so the two types of hybrid events. The first one being the pre-recorded, right? That is shot in an environment. It's then broadcast out. There's no in-room audience like we have today. You can supplement that pre-record with, created animations, videos, and pieces to supplement the full investor day, and then it's streamed out over a live, feed to the world. And then you slide your transition right into an actual live in-panel presentation from your executive leadership. They get to chat to their analysts through the stream, no one in the room. Second option is live hybrid event. That's what we're doing here, right? It's the broadcast of, it's broadcasting out your investor day, talking to analysts in room and engaging them. It has supplemental videos, animations worked in, and then it's presented to the audience and around the world, right? So there are a lot of benefits to both of these. You're lucky. These are both great ways to host your new investor days, and they're critical, and you have to do this because this is what your analysts expect and want. So the pre-record, the benefits to pre-record. It takes away all of the doubt, all of the problems that can occur. You are pre-recording it, you can do 100 takes. There are no more executives who like to go off script a little bit. That's all taken out, right? You can do takes over and over and over again. You can work with the fantastic Edelman team with their presentation coaches. We'll bring in a director for you to craft your message, and you can pre-record everything, edit it down, give it to legal, and they can rubber stamp it before you broadcast out, which is always nice, right? And you still are allowed to then engage your analysts through your live Q&A. It's not in person, It's through the chat and through camera, but you can still have that. It gives the illusion of it being live, but it's pre-recorded. Option 2, hybrid live event, and why that's so great is because you get exactly this, right? We're feeding off of each other, we're working together, you're hearing my presentation, you're hearing this, and we get that real connection to your analysts. That matters. Maybe you haven't seen an analyst in a few years. You get to take them out to coffee or hand them that new product that you're working with, right? That's exciting. To do a demonstration of your items to them live matters. It's that connection to your analyst that goes so far down, goes so far in creating an exciting and successful investor day. It's about building familiarity with you, your executive leadership, and your brand. That's what you need. That's one of the keys. I was only going to give you 3 keys, but that's a key. So that's a 4th key. So 3 keys, and then we'll go to questions, right? And the first one is so blindingly obvious, but it has to be said. It's a foundational piece to everything we're talking about. You have to pick what you're doing. Are you going to do a pre-record or are you going to do a live hybrid, right? Which one works for your brand right then and there? And maybe your next investor day is pre-recorded and the one after that is a live hybrid. It depends on what you're doing. Work with your Edelman advisor to figure out which one's right for you. Work with your production partner. They will work with me. I want to help you, right? All right. So you have to work with them to understand what the best way to sell your next investor day. Maybe you have brand new brick and mortars. You've renovated them all and you want to bring all your analysts in. Do your live hybrid right from your brand new stores. Show them the amazing things that you've done and the money you've spent to really up your game, and they can interact with that space while you're still talking to your audience through the stream. They can feel it, right? Or maybe you're a tech savvy company and you want to go do a Mandalorian style LED wall stage and go AR, VR and dive into worlds and really show, like Apple, that real premium look, and that's pre-recorded, multiple cameras and angles, allowing that presentation to really sing and explode in everyone's mind. Once you figure out which one you're doing, your foundation is there, right? Your first piece of your foundation, there's 2 big pieces. The second one is your story, your script. You have to write your script. Basically, as soon as you have figured out which you're doing, you're already starting to write your script, right? You've already decided which executive leadership need to speak in the event and at your investor day, which can be pre-recorded, right? There's lots of opportunities to get additional people from your company into your investor day without having to have them be there because they only need a few moments. Maybe it's your head of tech who designed that new app and you want him to talk about it, right? So that matters. So your script is telling the progress is who you are right now and where you're going. It grounds you, it humanizes you, and it connects you, right? All those additional pieces of content that you can create. Animations for that piece of tech, that app that's maybe a little too complex to just explain. I think most people in here have a piece of your business that's too hard to just talk out and analysts get. So make sure that you create something that's visually striking and compelling, and they can watch it and engage it and understand it. Maybe you have client testimonials. What your new brand strategy is supporting them. They're making great money now. You want their words in your investor day. Go out and film then. Put that together, right? Maybe you have internal employees who are talking about the app that they built or the new strategies you're implementing internally that are making business move better, faster, more effective, making better money. Right? So telling that story, as I said before, your story has to be crafted out at the beginning. The last trick, key that I'll give you, and I do this for the CFOs in the room, because the CFOs have a hard time and we love you, and I'm so sorry we make your lives hard sometimes. There is so much ROI now on what you're doing. This kind of speaks to what Jordan was just talking about, but all of this content, everything you film is now usable again, over and over and over again. Don't think about it as spend on just an investor day. You can now chop all that up. All those little individual stories and videos you made become HR videos. Your employees talking about how great the company is. You can show that to potential hires. Or maybe you've highlighted a new executive who doesn't know the company, people in the company you don't know. Those animations become online posts. Great marketing material for you. All right, and then your actual investor day has legs far after just the microsite, and you have to leave it up because of the business. And but I'm not the business guy. That's my partners. I don't know what an EBITDA is. It drives me nuts. I just sit and smile when people talk to me. I'm the camera guy. So, where was I? Oh yeah, so you can take your investor day, chop it up. Each individual segment, each individual executive is talking about a specific plan that they have with their department, their team. Cut that down and give it to that team. Show it internally, distill it down, make it a little smaller. That will give your teams guiding lights and North Stars to work towards. Maybe they don't know it. Maybe there are new people in the room or just trying to get on board. And the last piece, this is what I love the most out of this, especially out of the pre-records, is there's nothing better than laughing at executives. I'm sorry, it's so much fun. So you can take all the flubs and the bad lines and the swears and cut that out of those pre-records, turn it into a blooper video. Nothing better to give to clients or employees at Christmas or at the next Christmas party. Let everybody get a good chuckle out of it because it's great fun. All right, so it's super fast because I have a lot of coffee in me. But I also wanted to get to the question portion because that seems like the most important part of this. So thank you, I appreciate it. Hopefully this gave you an idea of what a hybrid event is, which I think we all know. Our kids are doing it at school or did for a year or two. You know, what a hybrid event is and how you can implement a hybrid or live, pre-recorded Investor Day to your next Investor Day. Thank you. All right, questions? Yeah.
For the people who are doing the virtual, how do you keep them engaged while they're sitting at their desk?
So a lot of that will go into there's a balance of entertainment to the actual business that has to go into your investor when you pre-record. It is critical that analysts get educational information to help them underwrite. Critical. You have to give them that, and they want it fast. But every analyst, every single person in this room is staring at their phone how many hours a day? They're consuming so much content. It has to be striking. It has to be beautifully shot. It has to be well crafted and designed. It needs to be treated with the premium level. If you were going to go out and rent the Pierre Ballroom and serve everybody the chicken or the fish for 3 days, turn that money from that investor day into fantastic content that is educational. That's how you hold them in. The other thing you can do, and you need to talk to your legal team about this, is you can send them gift cards for Starbucks coffees. $5. Order a coffee on me while you're watching my investor day. It's fun, it's funny. You can send it out in the middle of the investor day as long as your legal team doesn't say it's bribery. All right. Questions? Yeah.
Okay. So I work for Etsy, head of investor relations, and we are trying to sort out what we're going to do next year, hybrid, virtual, whatever. We had a meeting 4 years ago. We do video conference calls for earnings today.
Yeah.
And we take questions through a chat functionality that I serve as moderator and I read the questions. So if we're having an event like this, I see we're not taking any questions from anybody on the webcast.
We actually
right
are, just so you know, if there are people able to text in.
So that's what you would recommend for a situation like that. You'd recommend that we had someone on the side taking questions, chatting, or I have seen some investor days. It looks like people are actually asking questions into the room.
Sure.
Is that so? Tell us how that works and if that's really good these days.
Yeah,
Okay.
it's fantastic. I mean, the infrastructure has exploded over the last few years, but that ability to interact with your analysts online and your investors online, we had to figure out a way to make that really robust. So there are specific softwares, and many of them I'm not going to talk to you about names of them, but there are ways to either have people live chat in or call in. We can do Zoom calls, and there are ways to integrate it into the room so there would be a speaker right here, and that person, maybe it's an analyst you know, have known for a long time. They can go, hi, hey, it's Owen from Bowen. And you can say, oh, hey, how are you? And then you can have that chat. And that allows that personalization I was talking about, and the importance of staying connected to your analyst and humanizing you and your business. That help? Yep. Great. Questions, concerns? I guess I'm hey, yeah.
How do you feel about, I think it was Spotify's earnings call where they had basically could upvote questions? Thoughts on that?
Sorry, Claire, the question is how do I feel about Spotify's upflow?
Well, just more generally speaking, in terms of that level of interaction where potentially you're reaching to a broader audience, not just the analyst, but an investor could ask that question or have that question, it gets upvoted.
Oh, excuse me, upvoted. I think that's something you need to discuss with your Edelman team. We would implement it for you if you want it, if it seems like it's something good. Personally, I think your goal is to try to get to all your questions. The goal is to talk to all of your analysts and all the people on the call and to support them and make them feel heard. So anything you can do to extend out, and we can always extend out our question and answer period at the end. Not today. We're not allowed to do that today. Sorry, I only got 23 seconds left. But you can always sort of extend out and do that if that's what you want to do, what you feel. I would definitely do it. Well, I've got 11 seconds, so I think I'm not, unless, oh yeah, one more. Oh boy.
So you're a creative.
Yeah.
Love the sneaks.
Thank you.
Of these options, which one do you think gives the best product for the viewer, based on your experience?
I have my personal opinion of what I like because of who I am as a creative mind, and I love to creatively craft an investor day and own it and control it. I have made Super Bowl ads. I have shot TV commercials that you have all skipped over or tried to violently skip over on YouTube. So I would personally, I enjoy the pre-record. I like that control, and I love being able to work with executives to make them sing and make them sound great. And there's so much you can do. But the beauty of a live is you can add all that in. You can still add all that exciting content into your presentations. You can coach executives to be more charismatic than they might already be. There's a lot of great there, but I'll give it one tick to the pre-record personally for the safety. And again, I'll shout out to the lawyers who are maybe on the call. I like giving them a little peace of mind. So I think we'll end it there as I'm out of time. So thank you everybody for having us. We're actually going into a 15-minute break for our audience at home. Thanks for being with us. We'll be back in 15 minutes. Please don't go anywhere. Maybe go put some pants on, come down to 250 Hudson. We'd love to see you. Everybody else, we'll have some coffee. We'll be back in 15 minutes. Thank you.
Welcome back, everyone. Thank you for being with us today. Hopefully we had a good, quick little break, and thanks to the folks dialed in virtually. Hopefully you were able to step away and are now back to your computers. We're going to kick off the second half of our session of the boot camp with a great panel that's going to explore sort of the buy-side and sell-side perspective of what an analyst day means to them and some learnings from them. So I'll turn it over to my colleague, Stacy Turnoff, who's an EVP here at Edelman Smithfield. Over to you, Stacy.
Thanks, Ted. Good afternoon, everyone, and thank you for joining us today. So today's a really fun panel for me to host. I spent 20 years prior to this career working in their roles as a sell-side and buy-side analyst, so I think it'll be pretty engaging. These three men over here just have incredible backgrounds. Let me quickly just give you a bio about them. So first, Dan Flax, Managing Director and Senior Research Analyst at Neuberger Berman. Dan's been a buy-side analyst for about 16 years. Probably attended hundreds of analyst days, right, in your career?
And then some.
And then some. So now, next to him, we've got Ern Romberg. He's Global Head of Consumer and Equity Research at HSBC. He's been there for 17 years, so I've got a heavy hitter line here. He's also a published author, writing 2 business books focusing on consumer insights, so thank you. And last but not least, Oliver Chen, and Managing Director and Senior Equity Research Analyst at Cowen. He's covering retail, new platforms, and luxury. So he's been a sell-side analyst for 16 years about, yes. Right? And he's also an adjunct professor at Columbia Business School. So thank you all. So let's get started. So I want to let's start big picture, and let's just talk just generally about your thoughts. What would you say would be the top 1 or 2 best practices for an investor day? So would you like to start, Dan?
Sure. Thanks, Stacey. Thanks for having me here. I'm delighted to spend time with all of you. So really 2 things that I think about for an investor day. The first one is boil down your message to 2, and if you're feeling generous, maybe 3 bullet points. You should be able to describe in 20 seconds what your messages are. You have to get that across very clearly at the beginning, the middle, and the end. Beat them over the head with it, and then beat them over the head with it again. The second piece of it is you need to provide a little bit more insight around your business, either your intellectual property, your customer relationships, what's changing, how the business is evolving. All of that should be supportive to point number 1, but you want to provide something a little beyond just boilerplate language. if I think what I want to walk away from the Investor Day with, it's incremental information to help my investment framework, which means in English, I have more conviction around some part of your business. I understand better where you're going, what you're doing, why you're doing it. The only other piece that I'll sort of, just kind of round this out with, and I'm sure my colleagues here have thoughts, you need to know what you are. Are you a growth story? Are you a margin story? Are you a balance sheet story? Are you a transformation story? What are you? You need to get that across in that first 20 seconds. If you are not clear on what it is you are, the rest of the day falls flat. You have to be very clear in what you are. If you're a or if you're a margin expansion story and you pretend to be a growth story, doesn't work. If you're a balance sheet story and you think you're a margin story, doesn't work. If you're all three, perhaps maybe that's interesting. You need to know what you are, and you need to get it across in 20 seconds or less.
So, Erwin?
Yeah, thanks a lot for having me. I would say if you look at, so the core of my coverage is luxury, right? And if in a post-COVID world, if you're thinking about buying at Vuitton, let's say, give me a reason to move from my sofa or my chair to actually leave my home and go and buy in a store rather than buying online. For me, an investor day is similar. Give me a reason to actually attend. If I have access to the CEO, the CFO, the IR folks that I am accustomed to seeing or speaking to on a regular basis, that's not enough. So give me access to people that I'm not supposed to meet on a regular basis. Give me access to experiences or to a discovery that I could not do on my own. And to your point, I guess about storytelling, give me access to part of your staff or again, new technologies that help me buy or understand the story better. I think a lot of investors don't really buy earnings, they buy stories, right?
Yeah.
So, tell me a story that I cannot have access to on a regular basis. I can call the IR every day. I can speak to the CFO every quarter. I can see the CEO if I'm a big shareholder. Give me access, give me a broader access than that.
Great, thank you. Oliver?
I would agree. Thank you. Great being here. I think being immersive and creative, looking for unique formats that can't be replicated online or through the earnings call. That means multimedia, it means product interaction, it means opportunities to mingle with management. Two, I think the management piece is key because we will have an opportunity to see another layer of management, which gives us an ability to understand the bench and the long term and people we wouldn't normally interact with. And then third point, I'm always thinking hard about innovation and what does innovation mean to your company and how do you really demonstrate that in a different way in order to justify your core competencies. So this idea of innovation, the class I teach at Columbia is called Magic and Logic. It's kind of giving me an essence of why your core competency is not replicatable and doing that in a way that speaks to yourself, whatever that may be. So it can be a real glimpse into the creative process. It can be how is the customer data platform really transforming your agility and AI engine. It can be a lot of things. It just depends. And I think socially, I like the night before meeting management and talking to management and having an opportunity to do something that's not so rote as well to warm up what a culture really feels like.
So I'll just ask you another question, Oliver. So why do you think a company should have an investor day? What would be the main reason to have it?
My perspective on my job is I'm an extension of investor relations. I'm an extension of amplification of a message. And I view these opportunities as training programs for me. Because I'll get asked, we'll all be traveling around the world to meet with people like Dan and have to be the best we can be. And so I hope that these days help me be better prepared to answer questions.
Okay.
And also it's very, very important because strategies are shifting rapidly and management teams may or may not be changing, but the theme of retail has been disruption. So the reality of disruption is reinvention and also this evolution towards what customer centricity means and this dynamic force. So it's essential, but you really have to know your customer. You have to know yourself. And it's apparent to us, since we've been to hundreds of these, the degree of which that's true within a company.
Got it. So today in the market, macro is really, there's a lot of uncertainty around the macro environment, and we've got a number of clients that say, maybe we shouldn't have an investor day today because of macro. And I'd love to get your thoughts, maybe, or you want to discuss, tell us your thoughts first. Should that be a deciding factor on whether you should host an investor day?
Yeah, I mean, in my own coverage, part of what I look at is also sporting goods, and you've had an investor day with one of the big German manufacturers recently, which was ill-timed, I guess, because they made a very bold, very bullish, set of statements, which very rapidly afterwards, because of the macro, they had to retrench from. So I think in the current times, either you postpone to more stable times, or at least you should offer, a sort of scenario analysis, a sort of answer to what-if questions, because we're in a world that's so uncertain that you can't basically be that arrogant or aggressive or however way you want to frame it. But yeah, I think you have to offer options or scenarios.
All right. Dan, do you have any thoughts on this?
Yes, I think about it a little bit differently. So I invest in technology, and I'm looking across the internet. I mean, so FANG and Apple and all those, so big companies, and kind of right the way on down. If you look back over the last 10 or 15 or 20 years, what you've seen in technology, and really obviously in all other industries, but I'll focus on tech for a moment, is that the innovation cycles, the products, the intellectual property, all of that is going to move forward whether we're in a recession or not. And so I have meetings often with CEOs, with companies, CFOs, IROs, all of the men and women that you all are working with, and it's all of you. And I know none of you can control the economy. In fact, if Jerome Powell were on the panel, he might also say he doesn't know. So if we all agree that we don't know, what we can say, and as a shareholder or prospective shareholder, I'm looking to see what you can do to further your innovation roadmap, right? So if you look at 08, 09, the Great Recession, I don't know what we want to call this current period, these are extraordinary circumstances. The next downturn, I'll go out on a limb and say, it too will be extraordinary. What I suspect, and I've been meeting with companies nonstop since Labor Day and before Labor Day, and they're those companies that are pushing ahead with their innovation roadmaps. They're those companies that are somewhere in the middle. And then there are those that are lagging a little bit. All of them are intelligent men and women who are leading these companies. The question in my mind is who, along with their board and their senior leadership and all of the men and women inside the company, all of their broader ecosystems, developers, channel members, all of those participants, who are looking to push ahead, who are looking to forge ahead, whether GDP is +2, +8, -10. Because those companies that are able to do that are going to come out with differentiated solutions. They're going to become more valuable to their product, to their customers, and that ultimately is going to lay the foundation for future growth. So that is what I'm looking at. I often get the question, are we in a recession, or what about a recession? It's easy in my mind. I just assume we're in a recession. Okay, next, right? And so I'm focused right now. I'm focused on what your growth and earnings and free cash flow generation is in 24 and probably more like 25. Why do I say that? 20, a mess. 21, 22, a mess. 23 mathematically has to be a mess, given this year and last year. We can go through China, Russia, whatever else you want to go through. But what I know at the end of the day is the market's likely to pay me for something, growth, margins, balance sheet, and I need to have something that's going to make me more valuable to all of my customers. So long answer to a very short question of should I have an investor day? I say the answer is yes, but know who you are, know what you want to get across, and just be realistic. Tell people, look, we don't know how this is going to play out from an innovation standpoint. This is what we're working on. This is why we're excited. The customer testimonials, even though we all get a bit numb to another customer saying how great a company is. I was at an investor day recently where the CEOs of, I lost track of how many companies got up on video and provided a testimonial. That was incredibly powerful. So I think there's a lot to do. So
Great.
hopefully that helps.
So I'm going to do, throughout this presentation, a couple of sort of quick survey questions that I think the audience will want to hear. And so, and I'd like just to hear a response from all of you guys. How often should a company host an investor day? Meaning, is it once a year, once every 5 years? What do you think the best scenario is? So why don't we just go down the line?
Every 2 to 3 years, depending on what there is to say.
I would say, yeah, not that often actually. Most of my companies are family controlled, and so they think for the next decades or more. So unless there's a big change in management or a transition period or a shift in the business model, I wouldn't host an investor day more than every 2-3 years.
Okay, Oliver?
I would say it depends on your strat plan, your 3 to 5 year plan, and if that changes, then you're ready. Also, management changes so that we understand what the long-term algorithm is and the total addressable market. I also think everybody should rethink what an investor day means or is, because you might just have like a coffee chat, or you might have a gathering or a breakfast. There's such a spectrum of incrementality where there's degrees where people like snackable content too. So just thinking about what that may mean and using that as a toolkit depending on context and risk.
Great, great. So I'd love to hear, you go to conferences, you see the CEO, the CFO, but how about some unique speakers that you have seen, that at least to share with this audience that you feel like you got value add and it was someone that you hadn't seen before? So, if anybody has someone.
Yeah, maybe, this will sound anecdotal, but, meeting with Kobe Bryant at Nike, or meeting with David Beckham at Adidas, or meeting with Usain Bolt at Puma, it seems very anecdotal, and of course you have the opportunity to have a selfie and blah, 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 but the reality is when you manage to link the brand ambassador to what the company is trying to put across, Kobe with power, ambition, dominating the market in line with the values of Nike, David Beckham for Adidas, basically building the bridge between performance and lifestyle, and Adidas going on that tangent of lifestyle. Usain Bolt, nimble, speed, Puma, small guys trying to, get a bigger place in a very, very competitive market. So these are, again, sound anecdotal, but the reality is it reinforces the message that they're trying, that storytelling that we were mentioning, that they're trying to put across.
Right. Oliver, do you have any one that you could think of that was a little bit more unique?
Yeah, I think we really like a retailer. How many people here know Revolve? But it's quite experiential. So attending some of their events really immerses you in what the influencer model means to them, and culture and music, and how that concept stays relevant, and with the Jenners and Kylie and etc. I've also had a lot of great experiences with Walmart in Arkansas.
Yeah.
And I think that attending their shareholder meeting and also spending time in Arkansas and their campus gave me a great feel for what that means. So I would highlight those. And then retail is very tangibly about products. So I do appreciate in the conferences having a setup that's visual and immersive so that we can get our hands on what these brands stand for more quickly.
Perfect.
Done fashion shows with Lululemon. And that can matter too, because the essence of innovation in retail can be product driven.
So I guess this would be a good question for Dan, because with sell side, you're basically required to go to all the events. But as a buy sider, you could pick and choose because you follow so many different companies. So what do you need to be incorporated into an analyst day that would get you to go from virtual to actually in person? Are there any elements that would take you off the couch?
Boy, off the couch, it's quite a hurdle. I'm a technology person, so I always like, moving to the virtual world was easy, but I think the physical world, in a lot of ways, is better. So I've been off the couch for some time. I start with the return on time, right? Because they're 30 hours in a day. You can only be on 3 Zooms at once, right? So what is it that's going to get you to go into the physical world? What's going to get you there is engagement with people, CEO, CFO, the IR professionals. One is generally in, I just think, regular touch. So you're going to see them. They're going to ask you for feedback. You'll give them feedback. And this is, I say that because one of the things that has struck me is a lot of companies and this actually continues to astonish me. They're always looking for the truth, and I'm always amazed that they find it so difficult to get the truth, but I can come back to that later. The point is, you need something where they're going to give you incremental insight around the business. As my colleagues on the panel have talked about, a layer or two below is extremely powerful. I will say this, and maybe I'm biased because I'm in the technology space, but tech is going everywhere. Is it good? Is it bad? Not relevant for now. It's going everywhere. So if I'm an automobile company, obviously a retailer, all of these other industries, you probably need to provide access to your chief technology officer. Is he or she laying out a roadmap that makes reasonable sense, right? Because if the tech leader and the board and the CEO and CFO don't have a view on that, whether you're a mining company, an auto company, a retail company, whatever it is that may be, the market either has or will question your enterprise value at some point. So you need a level down, and you need to have enough time to engage with the men and women at the company. 2.5, 3 hours is fine, plenty of Q&A. Again, I'll go back to the 20 seconds. If I think I'm going to get the clear message, reasonable expectations, and then time to engage with the company and other men and women below the CEO, CFO level, I'm going to go. The one thing I'd be careful with is the sort of boilerplate language and the 5 and 10-year targets. I don't want to sound critical of TAMs because they can be important. I'll speak for myself on the buy side. It's irrelevant. Why is it irrelevant? Because some companies create their own TAM, right? Or they're going into other markets. So when someone gives me a 40 or 80 or $500 billion TAM, my only question right after is, let's talk about the products or the innovation, the products, and how you're going to get there. Because if you can't discuss that, even if you have all the right logos on the PowerPoint, it doesn't hold water.
Great. So let's talk a little bit about the experimental components of an Investor Day. Back a year ago, we'd work with GM, and part of their second day was having investors actually test drive their products. And it was a cool thing for people to come in and not be able to do that, but there. And so I'd love to hear, is it a must-have to do an experiential component? And are there any examples that you could think of? So you want to start, Erwan?
I maybe have two examples. I think going back to innovation, as Oliver was mentioning, in the sporting goods space, for example, where you have a lot of constraints in terms of supply chain, producing in Vietnam, mainland China, et cetera. You've had the willingness to be closer to home in terms of production, and, for example, 3D printing for Adidas and Nike. And again, it sounds anecdotal, but the reality is it's actually gradually becoming a lot more meaningful. And you have Adidas producing in Germany, and you have Nike producing here in the States. And seeing that, I think with your own eyes, designing your own shoe and then suddenly seeing it produced in like 15 minutes is pretty telling. Another experience that I have in mind is attending an investor day for Pernod Ricard, the spirits company, pretty big in cognac, scotch, and vodka. And I was on a trip in China with them. Basically seeing their points of sale, so essentially attending bars and karaokes and nightclubs to see how they were selling their products, and seeing cognac being sold to very young individuals. I'm French, in France, people who drink cognac are not very young, and seeing them mix it with green tea and seeing how the product was sold was quite an eye-opener in terms of understanding the process and how different the process there is from the 3-tier system of spirits in the US, for example.
So do you think it's a must-have component?
Absolutely,
Yep.
yeah, absolutely. I mean, you want to touch and feel and understand stuff that you cannot understand just by reading a press release.
Yeah. So Oliver, I'm sure you have lots of fun experiences covering retail, so maybe you want to share one.
Yeah, sure. I mean, I think the principle here is active learning. So, and the best principles of the teaching methodology is you have an active learning component, and also students and analysts learn in different ways. So I think a principle is just having variety in Investor Day, whether it be video, in person, because different people learn in different ways. And then you theoretically want a response. But in terms of memorable, was Target Laboratories looking at their augmented reality pretty early and experiencing that in a booth. Lululemon and their laboratory with fabric technology and innovation, and then most recently Tapestry. So how many people here are familiar with CDPs, customer data platforms? I mean, it's kind of a weird thing actually, but they demonstrated the power of their CDP on screen with how quickly they could flexibly create a website. You can't really explain that without showing this stuff, and it's really hard to talk about. But the CDP and the agility and the speed, they talk about that on our earnings call so much, but the interaction of that module was quick and easy.
Right.
So these things give you a shortcut to memorize.
Yep.
That's how I see it. And I remember these, that's.
So wanted to segue to a different topic, and I'll ask you, Dan, this. How important is it for companies to address ESG in their investor day? Do you think it's something where they should, dedicate a lot of time, small amount of time? What's your viewpoint on that? Because we get a lot of questions.
I'd be flabbergasted if you weren't getting a lot of questions. So it's something. It's core to our investment framework, but it really has been for a very long time. So I don't look at it as anything new per se when I'm thinking about investing, because 10, 15 years ago, I thought long and hard about it. In terms of just being very specific, yes, all companies, or many, many companies, are putting slides in their earnings decks, sections in their analyst days in some cases. But one is very quickly able to discern what is just paying homage to the ESG gods versus trying to have it reflect something that is actually foundational to your business. And I'm going to maybe just focus for a moment on part two. A lot of companies, and we as shareholders or prospective shareholders, struggle with how to extract data and put that in something that we can measure you against every other company with. And of course, you and we all have advisors to try and figure this out. But if you stay true to what it is you do, what you measure, what you are working towards, and I'll come back to that in a second, I think you can have it be additive to your investment story. So for example, there are companies that don't score well in various third-party surveys, metrics, whatnot. They actually do a good job, but not enough of that data has been brought to light. And the companies, we have, and I'm sure other investors have, conversations very directly about how to bring some of that to light. The important thing in my mind is just explaining the journey that you're on, regardless of what industry you are. I don't think you need to be apologetic about anything. I think it's more when you think through this notion of continuous improvement. Hey, this is what we learned. This is what we're doing. This is what's changing. The way we look at this in Malaysia is quite different from Brazil, the United States. Within the United States, Florida looks at it differently than California, than Arkansas. And so this notion of bringing out the human aspect beyond the numbers and showing what you're changing, what you're rethinking, that's what I look to see. And by the way, it's the same at an investor day. It's the same on earnings. Try to give a little bit of insight in terms of what's changing. So for the men and women who parachute into your story for that 2 minutes, right? And maybe it's 3 minutes with a Zoom break. You need to get across what's changing and what's management working on and how are you messaging differently. If you can do that, because we're all grown-ups, and you can say, yeah, we learned this, we're changing that, then I think ESG becomes very much an additive element to the story. If we're going to frame it as, yes, being part of ESG and we weren't doing that before, sure. But what I care about as a shareholder and as really a stakeholder in what's going on is, are you thinking about these issues? Are you trying to engage yourselves, your partners, your customers, all of your stakeholders to make continuous improvement?
Great, thank you. So if we transition, a lot of companies say, there's misperceptions about my company, I'm trading at such a low valuation, my stock's underperformed. Do you think that a company can reset their valuation from an analyst day? Maybe you want to start. I'd like to hear Erwin and Oliver's thoughts on this.
Yeah, I think if there is evidence that you are shifting your business model, if there is evidence that the sort of growth algorithm, to take your expression, is shifting, and that you're trustworthy, then it could be the beginning of a re-rating. But unless there's something fundamental that's changing, you probably have to fix issues.
Yeah.
The market's always right.
Yeah.
So at some stage, if there's not an inflection or a transition, why would you have a re-rating if there's not something fundamentally shifting?
Oliver, any thoughts?
Yeah, for sure. It can definitely happen. It depends on the fundamentals and basically managing to lower standard deviation and beating and raising your estimates.
Yep, exactly.
It also depends on durability. So I do think multiples can be higher if we have conviction that there's an appropriate bench for the long term and that a company has a replicatable process of leadership, because that matters for the long term.
Great. So actually, on the long term, and this will be a quick survey, if a company were to give long-term targets, ideally, what would it be? Would it be 3-year, 5-year, 10-year? Just we go down the line and give us your quick thoughts?
3.
Okay.
Most of my companies don't give targets, so I would say 3 to 5 at
Okay.
least.
Yeah, 3 to 5 is fine. I mean, yeah, sure.
Okay. And I know I want to leave time open for a Q&A, but I've got another question that I think is on people's minds is on Q&A. And there's debate, when should we have Q&A? Should it be in the middle? And then should we have it at the end? Should we wait till the end? I'd love to get your thoughts on when you should put Q&A into the whole Investor Day program. So Dan, you want to start?
Sure. Try and have at least 2 sessions because, and I recall in Analyst Day very clearly, the CFO said something. This was a while back, and so, but I recall they didn't do a good job explaining something, and then they had to explain it out in the Q&A. All of you will do practice sessions of Q&A before the event, or at least I would suspect you do. But try and have a couple, and try to be honest with yourselves and be honest with the people in the audience. Just call it the way you see it. That may sound a little bit too straightforward, but try, because the buy side sees through it relatively quickly.
Erwan?
I'm quite favorable to a sort of ping pong or a sort of multi-layered sandwich where you have a presentation and then you open up.
Yeah.
And it becomes a bit of a conversation, and it keeps it lively.
Does that mean at the end, or
no? It means
in the middle, and then,
every time you have a presentation, then you have a Q&A on that topic that was addressed, and then you keep it lively that way.
But that's not commonly done today.
It's not commonly done at all, but it happens sometimes.
Yep.
And it avoids, basically people, being half asleep after, 4 hours of presentations and thinking, oh my God, I had a question in the first 20 minutes, and now I have like 8 questions to ask.
Yeah.
It's. I think it's more likely.
My take is either twice or once. If it's a longer day, twice. But if it's shorter, you can get away with once. One idea is you could have IR try to compile a few common questions and have them kick it off. But you also don't want to be overly sanitized and very authentic.
So, after an Investor Day is over, I'm sure you still have questions. And so I would love to hear some best practices in terms of availability with IR. Do you have a chance to talk to management, whether it be the next day or a few days later? But what have you seen? And I'm sure even Dan with you that you're going to go back to your model, decide if you're going to increase your position. Like, do you need to talk to the company? So could we just go down the row and?
Sure. I will often follow up with the company afterwards. Most of what I'm looking for is explanation on some of the assumptions in those targets, right? And because not enough of that will get surfaced during the discussion. And so what will typically happen in the more effective analyst days, the CFO he or she will walk you through, our assumption is A and B and C. And so then I won't need that call. But many of them, they don't necessarily do that. So you either pick it up in the Q&A or at the bar afterwards. And if you don't, because you have to go get a flight, then you're going to need to have a call. But I would just say one thing. It's never just about the Investor Day, and I never think of it as, I've had all my questions answered. It's a journey. And being a longer-term shareholder, I'm not after oh, the magic answer was 4 there. I'm just trying to learn a little bit more. And then think about what am I going to learn a little bit more the next time.
Yeah, I think it's a continuous conversation. I agree with you. It's not, it's not all about that day. It's, you speak to the companies that you have an interest in on a very, very frequent basis. I think on the day, it's probably good to have, management being available for a drink or for, more of a relaxed session afterwards, just, if you have any ad hoc questions that were not addressed during the Q&A. I have had the pretty painful experience of investor days where you had a delivery of a message and then the management team basically left, which is incredibly frustrating. So I think people have traveled to come and see you. People have made the effort, at least stick around, in a more relaxed session for any pending questions.
Do you see? Have you had management teams meeting with investors post the analyst day, either that day or the next day? Has that been a common practice that's worked? Okay.
Yep.
And Oliver?
I mean, we usually no, to be honest, because the investor day answers a lot of questions, and I got to spend hours. And I cover 40 companies and worked on 20 IPOs, and Dan probably covers hundreds. So it's what happens though is I appreciate when IR reaches out to me directly and asks for feedback, and I'm happy to give it. And also, when we market with companies and do non-deal roadshows, I'll try to really work hard at providing feedback to IR too.
That's great.
But if the IR, I feel like pretty full when I'm at a good investor day. Like I'm good.
That's
like
great.
After,
So. Yeah, but I was just going to actually say, let's open it up for questions. So you're the first one.
It's related to that, though. So actual takeaway materials, like physical or digital, do you have something to take away with you, or have something available on the website? I don't know what's going on.
Is the mic not working?
Digital and that's it. Less is more. And just post your slides ASAP.
Yeah, you don't need to take away anything apart from what you have in your mind.
I like paper. I actually do. Because I write on it when I'm looking. So and then I will look at those slides later, actually, and keep that heavy book around. Because I'm a bit of a hoarder, so I like paper. And then I like if it's compliant, like the right kind of product that's showing your message is cool. I think QR codes and leveraging, like if you want to know more, go here, is cool. Like a cool way to extend if you want to know more. Those are some things I think about.
So you talked a lot about having more than just the CEO and CFO and kind of going down CTO, COO, whoever it is. I think I know what the investor answer on this is going to be, maybe Edelman's perspective. So I was at an investor day recently, and a couple of the investors said to me, it's great that you had all the management here. Would have been helpful to have some of the board members here. As an IR, I said, yeah, that would be great, but in my mind, I said, no shot. What's like your advice on that? Do you think it's helpful? I mean, I think as an investor, you probably say yes, but it feels like it's a little risky to me.
It is. There is some risk to it. It's not very common. I mean, I've gone to hundreds upon hundreds of investor days like Dan, and I have not seen that happen. I mean, the board does, look at the deck. They give their viewpoints on it. So what you're seeing is also going to be buy-in from the board as well. I think what's actually more interesting is when you're having people even below that, like, might be a divisional manager, might be, running a certain brand. Like, that to me is interesting to have those people that I would never see before. But I think that, you tend to stay away from that because there is some risk attached to that, and to be sticking with executives, but then also that level below. Sometimes some companies will even have a dinner or cocktail party the night before, and that's a great opportunity to invite that next layer of people to actually be able to talk. But the key also is you have to guide them to what to say. It's very important to be able to train them on Q&A beforehand and making sure they know, what the party line is in the script. So that's a huge part of it.
I might add just one point, because I think you raised something very important, and I certainly, Stacey's comments are, obviously spot on. I do think, though, having an engaged board and demonstrating that your board is engaged is incredibly powerful. I think, and I of course will not be specific, but there are many companies, this is just all over the newspaper, right, where I guess at times there are questions around the effectiveness of the boards. And so I certainly, I'm speaking for me here, I spend a great deal of time assessing the board members, trying to glean how engaged they are. I do meet with board members periodically, depends on the company. And so if you can have it, if you can showcase the engagement, I think it's incredibly powerful for a segment of shareholders whom I suspect you would want to have as long-term shareholders.
But at the same time, you agree that it's probably not appropriate to have board members at a venue which is an investor day.
In some cases, though, they have been there, and I've spoken to them, and I'll go back to something I said earlier. I'm always astonished is too strong, but everyone's looking for the truth, including the board members. And so the more the board and the CEOs and the CFOs and all the sort of those men and women sitting right at the top, the more they understand the issues that all of you are facing every hour of every day, the better. Because in many cases, they don't. And sometimes they will come into my office and they will say, hey, I would like to better understand the gaps in perception here. And I have enormous respect for a lot of the IROs that I've worked with. And I know that many of them struggle with the fact that some of the boards aren't always as engaged as they might be.
I think it's
Just
a
a thought.
positive. I think it's a good thing. I think they should be involved, with lots of caveats. I had good experiences with it, and for example, lunch and round tables and rotating tables where there were board members, and I thought it was good consumer research for the board members too. And I left the meetings feeling like, oh, this company is very transparent and consistent and thoughtful. I mean, it can work many ways, but
With preparation
Yeah.
before. We have a question back here.
One thing we need to do is reset our sell-side coverage. We've had a couple of organisations drop us over the last few months. We're down to 2. How do you use an investor day to reset sell-side coverage?
Well, I think I think we face this a lot. Lots of disruption. I actually cover luxury goods, healthcare, outer space. We took Virgin Galactic public, and broadlines and retail. So I traversed a lot of sectors, and it's really not about the investor day as much as it is hand-to-hand engagement, like you or others reaching out to analysts to talk about the story, and to perhaps, okay, Oliver, we'd love to go do a non-deal roadshow with you. And I would focus on those tactical efforts, because they're going to be more straight shots at your objective. And that means getting people to know you through these events and maybe bringing them by Neuberger Berman, and at the same time, that analyst would learn more about it. Also, if an analyst at a firm has a conference and you want to be a part of it, that's a great, a lower touch way. The investor day, it's a massive project. I wouldn't necessarily use that. That's like the bridge to, hopefully by the time you know these analysts that you want, you'll know that they will want to come. That's what I'd say.
I agree, for once. I think indeed having the sell side help you on corporate access, getting to know you better over time, attending conferences, organizing roadshows, organizing events. If I don't know what business you're in, but if you're in retail, opening a new concept store or whatever, the more you know a story, the more you're compelled to eventually, take that company as part of your coverage. So I don't think that day is going to make it. I think it's more about developing a relationship with people who gradually get to know you and then think, oh, this is a great story. We should actually include it in our coverage.
I think you can be quite explicit in your ask. Each firm has really different methodologies for why and how they may pick up a stock. So you can be like, well, we want you to pick up our stock. What does it take? It cost us $250,000. Like when you put up all the fixed charges across coverage. So it's very, there's a cost for coverage, in terms of like internal benchmarking, at least $250,000.
Got to be some more questions. Got one from Lauren.
We've been talking a lot about quantitative and qualitative, solid conversations at investor days. But I think, Dan, you were saying, obviously, it's hard to predict the future, and companies go into investor days thinking, I have to provide a long-term growth target and growth algorithm to my story. But ultimately, you're going to do the work to get to the right number. So how much weight do you hold in the numbers companies are giving you? Meaning, is it just more important to give you the pieces so that you get to the answer? Or them being very specific from a numeric standpoint holds a lot of weight to you, and that's what you need to hear and want to hear when you go into an investor day?
I think it's an important question, and I think you can approach it either way, and I'll explain why. It goes back to knowing what you are. So if you're a GDP grower and you tell people that you expect to grow organically 4 to 6%, well, that's tougher. If you're growing at 15 to 20% and you tell people you're a 20% growth story, that's tougher too. Why? Because once I'm done with the comps, FX, and the usual quarterly or really weekly force majeure events, the likelihood of you sustaining that 20 is low. What you can do, and I find some companies do this effectively, if you are, say, a 3 to 5% grower top line, maybe there's a little bit of margin expansion, maybe you're 7 to 10% total return. I'm putting a little bit of dividend yield in there as well. If you can help people understand why, in that case, you can, over a cycle, 3 to 5 years is how I think about a cycle. If you want to shorten it to 2 to 4, so be it. But that you can get to that 7 to 10 range, and there are different ways to get it. So for example, of my 3 to 5% top line, I'm growing 5, less margin expansion now because I'm making investments. I will moderate that growth, but then some of the investments will also level out a little bit. So I'll get margins in year 2 and year 3. People care less unless there's a huge delta on tax or share count, and you won't get paid for it typically in the stock market. But if you can get to whatever your range is, I think that's fine. I think where you're putting up extraordinary TAM and growth numbers, it's okay, but boy, you really better be able to stand by them in tougher times. What I think, and I'll only speak for myself, and I'll just say some longer term oriented shareholders, your ability to compound revenue or earnings growth over 3, 4, 5 years, it's so powerful. And if you tell people a story that demonstrates that you know who you are, whether you miss earnings at times, everyone misses or has to guide down, that's part of investing. But if you know who you are and you're going to allocate capital thoughtfully, then people like me will walk away from the investor day and will say, oh, that CFO, he or she has come up with a reasonable framework here. Everything isn't going to work, but that's in the land of reasonable. I think that's a decent outcome.
So one last follow-up to Lauren's question, and I'll ask it to Erwan and Oliver, is it critical if a company's giving a long-term forecast that you go into details, whether it's an EBITDA bridge, and giving those details, like, is that very important to you to be able to give sort of those line items to get to that long-term target? Because obviously it's moving and it could change from year to year. What are your thoughts on that?
I don't want to be too cynical, but I think no one knows the future. So I would tend to not trust what they're telling me and try to develop my own opinion. And I'll probably be wrong as well. But the biggest company that I cover is LVMH. They don't have a guidance. Okay. Their guidance is, we will take market share. That's been their only guidance since they started the business. And so every time they do an investor day, they bring you to understand Vuitton or Dior or wines and spirits or other activities, or Tiffany maybe someday. And during that day, they will help you understand how those assets will gain market share from their competitors.
Great.
And that's enough for me.
I kind of disagree or agree with you guys. Like, we're going to need this information. We're going to need the top line growth, the bottom line growth. If you don't say it, they'll ask in Q&A.
Right.
Like, everybody will ask. And I need a short story. Sometimes numbers just keep everything simple so the buy side can kind of compare ideas. Like, so I need to know when I'm in there with Ulta or Target, like, okay, here is the message for, this is the top line algorithm, this is the bottom line, here are the margin drivers. How much detail? Usually it's like what's fixed versus variable. What do you think the market's growing at, and how will you generate that alpha, and how?
Great.
And I think you can caveat plenty with scenarios and smart ways where you're not, this isn't in blood, and everybody understands we're in a volatile environment.
Well, we'll end up, do we have time for one more question? Okay, we'll make it quick.
This has been a great discussion. Thank you. Do companies talk enough about capital allocation during investor days? Is it the right amount? Should it be more?
I'll say companies should always talk about it. You can always do more. The better companies are able to say, in terms of the M&A, that because most acquisitions don't work, they can go back and say, hey, this is what's worked, this is what hasn't worked, and here's why. So to me, in some respects, all I care about is capital allocation, because the masterful management teams are masterful at capital allocation, and they create enormous amounts of market cap. And ultimately, at the very end of the day, that is what I'm betting on.
Well, at this point, we'll close. Thank you very much. I hope everyone enjoyed the panel, and thank you for coming.
Sure. Thank you. Our pleasure. Thank you. Good to see you.
All the time. I love it. Thanks, Dan. I appreciate it.
All right, we are at the final session of our boot camp. Thank you all for hanging with us. I will be welcoming out Lex Savanto, Edelman Smithfield Global CEO, Julie Hyman of Yahoo, and Jen Sweben of CNBC to have a discussion about how to think about the media and investor days. So I'll turn it over to Lex. Thank you.
Hi, everybody. Mic working? Yes?
1,
No?
2, 3, 4, 5.
Okay,
Yeah.
it's working now.
Are we going to leave that one blank?
I think we're going to,
Okay.
yeah, we're going to sit. So you just heard from an incredible panel of very smart, very insightful analysts, investors. Now you're going to hear from an awesome duo on the media side. Very smart, very incredible in terms of how to engage with the media around the investor day, but hopefully there'll be some additional insight in terms of how to work with effectively the media. So Ted said who I am. Do you want to introduce yourself each?
Sure. I'm Julie Hyman. I host a show 9 to 11 a.m. every weekday on Yahoo Finance. I've been at Yahoo Finance for about 4 years, although in pandemic years, I don't know what that counts as anymore. And I was at Bloomberg for many, many years before that at Bloomberg TV.
My name is Jen Sweben. So nice to see everyone. I was on Closing Bell for 10 years. I recently moved over to the events team at CNBC. And before CNBC, I worked in civilian news at Good Morning America and CNN and Access Hollywood. So I can sort of talk to both avenues.
Great. You replace any of your executives at Access Hollywood? That would be fun.
All right, later we'll talk about how to get CEOs on Good Morning America. But let's start with Investor Days. So some scene-setting questions. It's been a big news year so far. Biggest news story so far this year from your point of view?
So I would say 2 stories. The big macro story has been inflation and the Fed, and the sort of evolution away from transitory and the realization that we are dealing with persistent inflation and what the Fed is doing, and then the ripple effect and whether we're going to go into a recession, et cetera. That's definitely the big macro story. The micro story, or the company-specific story, unfortunately, is the one that's still in the news right now. And I say unfortunately because God, would this thing end already, is Twitter, is what I'm talking about. And the Elon Musk, mercurial Elon Musk back and forth, which is a fascinating story, but sort of an irritating story in a certain way as well, because, effectively, whether by design or not, he's kind of wrecked the company, or at least revealed a lot of fissures that probably were already there at the company and made it worse. But that's been a really interesting story to cover.
I would say the same thing, Elon Musk and Twitter, just because I think Elon Musk is just one of those characters that news outlets can't help but cover, and it is a story that is out there and keeps changing, and it's a big public company, so it seems to have a lot of legs.
A little earlier in the event, they asked the investors, so much uncertainty in the market, is now the right time, or in that context, is that a good idea to hold an investor day? How does uncertainty, volatility, short-term news cycles, how does that impact the way you approach media coverage?
So I would say to all the people out there who are booking during, a very bad market day, especially for CNBC, you have to prepare your people to be canceled. I mean, they do not care. Maybe if it was the President of the United States, we wouldn't cancel him, but any other CEO, anyone, and I can't even tell you the amount of phone calls where people are just in shock. And I feel terrible. Like, it's not my call, I feel terrible, but I do think if you would be, like, if they were transparent and honest, like, this might happen, okay? So, and especially now with doing Zooms versus in person, I actually sometimes prefer booking someone on Zoom, because then, like, it's not like they made so much of an effort to come somewhere just in case they get canceled because of a crazy volatile day. If that makes any sense.
We don't cancel people too often. Listen, if you're the CEO of a privately held shoe company and the market is down 500 points, okay, maybe we would cancel you. If you're the CEO of a relatively sizable public company, we're probably going to keep you, but we're going to ask you about it, right? So I would say your executives have to be prepared to address what's going on in the wider world and acknowledge what's happening in the wider world. So that's how I would say we would probably incorporate that into the discussion when we're thinking about the uncertainty and volatility out there.
So the topic of today is investor days. Companies put a lot of time into them, and then they want to promote them via media. When is an investor day newsworthy to you? What are the ingredients of an investor day where you're like, oh, great, let's have the CEO on?
I think a big public company, a strong story, a good talker for, if the CEO wants to be out there. I mean, you never want to put a CEO on if you want them to feel comfortable, right? Because that's going to make for the best interview. So I like the people who want to come on, because then it makes my job easier. And I know we're going to go into this later, but like the Palantir CEO, he is totally comfortable, totally honest, totally transparent, and like we love doing interviews with him because he's just a natural interview. So I think if that all feeds into making a good, strong interview.
We talked, I think, in an earlier conversation about how when an executive doing an interview seems too key messaged.
Yes.
That from your point of view, that doesn't make a good interview. Can you talk more about that?
Typically not. So just to make a second point about what Jen is saying, effectively, I think what she's saying and what I would agree with is that if the person is compelling to talk to and the company is compelling, then the investor day just provides a good peg, right? A good reason to talk to that person. Obviously, if there's also no news out of the investor day, a big change in strategy, any changes typically are what get our attention, I would say, and that's something. And yes, you want somebody who is not overly polished. I want to talk to a human. Yes, I'm talking to somebody who's heading up potentially a multi-million or multi-billion-dollar corporation, and there's a lot riding on it, but you want that person to be a human. And so, again, to come back to the earlier point, if we're going into a recession, you don't want the person to come on and say, everything is fantastic. Well, okay, like put that in context for it. How is everything fantastic for you when we're seeing XYZ happen in the bigger world? You want the person to be sort of honest with you on a certain level. I realize they're not going to tell us if things are falling apart to a certain degree, but you want the person to be, I like it better when people are conversational. We have had CEOs come on before, or other executives or guests who, for one reason or another, I get that people get nervous. I don't want to talk to somebody who's reading to me off a screen.
Mm-hmm.
You know, it just doesn't make for a good conversation.
So question, when you prepare, do you walk into these interviews as on-air interviewer with your list of, not that that's the same, but do you prepare and have pre-scripted questions that you plan to ask?
Usually I don't.
Okay.
I mean, keep in mind, I also typically am doing an interview with 2 other people who are my co-anchors. But even when I do a solo interview, it depends. It depends. If we're doing something like this, where it's an event or it's a longer form interview, then yes, absolutely, I will have a list of questions, and sometimes I go out of order or whatever. Typically in my daily interviews, I might have in my mind a couple things I want to hit, but it's not really that mapped out.
What about when a company's reaching out to pitch for an exec to go on? How much prep do you like to have? Is it just the day and the time, or do you want information about the company? Like in the case of an investor day, do you want to know the story? Do you want to see any of the materials? How much information do you like in advance?
I think every pitch needs to be in an email with just some background, and it doesn't have to be a book. It's just like concise, background, some recent articles. But I think one of the top pet peeves is when people call us, because we have to forward stuff or information around anyway. So it needs to be in an email. So anyone calling that's like, oh, I had this, okay, can put in an email. That is like 101. But then, if it is like a sensitive interview, I think a conversation is super helpful later on once you have all the information in the email.
Julie, with you being on air, do you like to hear direct from the company to understand what their strategy is, or do you read in advance to get ready for the interview?
Yeah, definitely. I mean, if you're talking about something like an investor day, getting some kind of materials, sometimes under embargo, if you can get what the company's going to be announcing, that is definitely helpful. I tend to like getting some kind of slide presentation is also helpful. That way, it's kind of the bullets of what you need to know. And then, absolutely, a conversation can at times be helpful to kind of get the nuance of stuff.
So at these events, you've got the CEO, you've got division leaders, you've got CFO, sometimes other executives. Which ones, in what rank order, are most interesting to you to have on finance, to have on CNBC?
I mean, CEO, you're always going to go for the CEO. But I will say there are also some companies where the CFO is a better talker. Or another executive. We don't tend to want to go below C-suite typically. We don't talk to CMOs. I'll say flat out.
Yeah.
As a general rule, we do not want to talk to a CMO because we don't want the sales pitch in that way.
Yeah.
But sometimes the CFO has a little more pep. I don't.
So if the executive is a good interview, that'll influence your receptiveness.
It can. Yes,
Yeah.
absolutely. Now, here's an example. Today we talked to the Norwegian Cruise Line CFO. The CEO, I think, is going on with Jim tonight. He's going to be on the cruise ship with Jim Cramer. The CFO was fiery. He was like, COVID is over. We're getting rid of the mask rules. Everybody wants to be on boats. The demand is huge. I mean, he was fired up. So he was good to talk to.
Yeah.
On site, some investor days, big companies, media will come on site. What's the criteria for even considering going on site? Jen?
I guess, what it depends on the company. And then it depends on what the news is too. And what else is going on maybe during that day.
That's a good point.
It'll be dependent on that.
I will also add that it matters, like, I know in the earlier panel, I think it was Erwin was talking about that if there are athletes at certain, it depends on who else is going to be there. If we're going to be able to go to an investor day and interview Usain Bolt, for example, that was one of the examples he gave, that's something. If it's going to be Boeing and it's in an airplane hangar and we're going to get to see the planes, like we're TV, it's a visual medium. So if there's interesting stuff to look at, that matters. But I will say probably one of the most important things is, do we have a relationship with the company? If a company is calling me and it's somebody I've never spoken before, if it's an intriguing company, an intriguing story, sure, it's something we want to consider. If it's a company that we have a longstanding relationship with, then that is going to be, we're going to be more likely to consider that. And I would say, like, I can't emphasize enough how important that still is to have relationships with journalists. Like I don't know if I'm front running your some of your questions, but I think it's just really important that
we're not scripted, by the way.
that it's not too it's not just transactional, right? Like it's not just a means to an end. Like if somebody's reaching out to me and it's a company I want to be speaking to pretty often, I want to get to know the people who I'm dealing with a little bit, right? And that includes the executives there to a certain extent. So, and then that is going to then inform the coverage going forward and how likely you are going to be to continue to talk to those people.
Jen, your view, do relationships matter?
Yes, I definitely think relationships matter. I think, I don't know, what else do you guys want to know about? I guess it's like if you have a trust developed, I think it makes people feel more comfortable.
On both sides,
if that makes sense.
I'm going to pause for a second. Yeah. I've got more questions, but I want to know if there's questions in the audience. I figured as much.
This is all really insightful.
Is it?
Yes. I work with mostly smaller companies, and some of them have really cool technologies. They're not consumer brands. They're not, high tech. It's not software. Nobody knows what they do, but they make the world work. How do we develop that trust with you and that relationship if we're never going to get on in the first place? How do we build that? How do we build that trust and relationship?
I think, I was going to say, I have a lot of PR friends, and they all have different types of companies. And I for one, I always try and help that company find a home somewhere, at CNBC. And it may not be on Squawk Box or Closing Bell, but, maybe there's something on .com, and just sort of like, our website does amazing. There's lots of avenues to get stuff on there. And I just think that's something to explore, because they're always looking for content too.
The other thing I would say is we are also quite willing to do off-camera meetings. Like if you want to get a coffee and tell me about something, I won't say I'll say yes to everything, to every meeting, but usually we're pretty open to doing that as a way of relationship building or just finding out about something. If it's a public or private company, that matters also. Just on my particular show, because it's a market open show, we're more likely to orient toward public companies. That's not exclusively the case, but that's generally the case. So even if it's something small, if it's publicly traded or if the stock is doing something interesting, that can make a difference also.
I think there was another question.
Actually, that was my question. How do you get started?
Oh, how funny.
Great answer. Thank you.
And I will say also, we're at Yahoo Finance, like CNBC is a big operation. Bloomberg, where I came from, is a pretty big operation. Yahoo Finance is not a big operation. And so I field a lot of pitches myself, and I'm happy to do that. And if I can't do it, then I can always pass it off to somebody else.
So back to the Investor Day topic.
Yes.
Usually there's strategy, there's division updates, there's financial, Any particular topic that to you would probably rise to the top? Which are the topics you want to hear most about?
I guess, you know what? Just any topic that is like understandable. I mean, I've gotten pitches from people that I'm like, you don't know how to explain it. So like, how am I going to explain it? And I'm going to get blown off. And like, just keep it simple. You know, what is that old saying? Keep it simple, stupid. Like, keep it simple. Like, keep it just this, you know, not too complicated.
I would say of those, probably financial. Strategy, like, I don't know, if a company is reorganizing from 3 divisions to 1 or 5, you know, usually that stuff is just not, it's not stuff that we're really going to cover. Yeah, I mean, we might be interested to have the information just for context, for ongoing coverage of the company, but we're not necessarily going to talk about it.
Is there an investor day that stands out in your memory, one that you can remember because they did a good job, or it was really newsworthy?
I knew this question was coming, and yet somehow I remain unprepared for it. I mean, to be perfectly honest, I think one of the issues is in my coverage and in my mind, I sometimes conflate investor days with analyst meetings and those kinds of days. And so I sort of don't differentiate in my brain between them, which maybe is part of the issue. I don't know.
I'll just say one thing. Like, you're pitching Investor Day, we're thinking story, right? So it's like, I'm thinking stories, like, no one cares I mean, they care if there's a story at Investor Day. Does that make sense?
Got it. So you referenced this a little bit earlier. At a lot of these events, there's a lot of materials. There's a deck. Sometimes there's infographics. Sometimes there's video. Sometimes there's other materials. Is there anything in particular that you really want as a part of getting ready, or?
Obviously, if there's video, any video, that's super helpful because TV is a visual medium. And
B-roll? Should companies be ready with B-roll for you?
Yeah.
Yeah, for sure.
Definitely. Definitely.
I will give an example of a conference that was not an Investor Day, and that's the NVIDIA GTC conference, which I think they have multiple times a year. And it's something that I covered and talked to the CEO late last year, I believe. And they came out with some really cool tech, but that's a different kind of thing.
So cool tech.
I mean, cool, you know, it doesn't hurt, right? to talk about that. And it also, there's different types of companies, obviously, but that also, when you're talking about semiconductors, which is sort of a very specialized technical product, it helps when you describe how it's going to have real world effects, right? What is down the line, how is this going to be used? And I think that's true for a lot of different types of companies. You know, enterprise software, for example, I don't know if there are any enterprise software people in the house. Enterprise software is something that is important, but it's tough to talk about because it's highly technical, because it's business to business. So any way you can sort of bring it home and talk about the end user and how it affects, even if the end user is not a consumer, but talk about the effect that it has. That's important, and that goes back to story.
So for the people, some in the room, PR people typically, agencies in-house that want to reach out to you, when's the best time to reach out? Are there best practices, worst practices?
Again, I hate the phone reaching out to pitch something is like, don't even, because.
No phone.
No.
For pitching.
Phone is good for conversation. Phone follow-up is good for
Phone
conversation.
Okay.
Or if like you haven't or if they haven't responded, just to like give you a heads up. Hey, I sent you that email. It's in your inbox. If you haven't responded, but to just talk about something is like it always needs an email. So does that answer your question?
It does.
Do not email me during my show. Do a modicum of research, find out when I'm on air, and please do not email me during my show.
And I will say, emails that are sent at night will get lost. So just don't even bother.
Best time to email you?
Between just
daytime, 9 to 5.
Or in the morning, especially if there's something
in the morning,
breaking.
For me, not between 9 and 11.
Yeah, right.
The other thing I would say is, and this is something I've learned about pitching other people, like, because we do pitching too, right? We make requests for interviews. Put something catchy in the subject line that's going to get my attention, right? A question or something that is just not, because it's easy to, we all know, we get a lot of stuff in our inbox. It's easy to lose things.
Now, there are situations with breaking information and news where a company does have to get information to the on-air talent, either seconds before or possibly even during the show.
Then you can, yes.
How does that? How,
then you can
how do you do that? How does that work?
That's like emails and frantic
But to
phone
the
calls.
but to the producer probably,
yeah.
right?
Yeah. Yeah.
You can send that to me too. I'll just look at it and read it on
So
air.
you are seeing a device while you're up there.
Oh yeah, I have my computer in front of me the whole time. Yeah. I've got Twitter open during the whole show.
Okay.
Because
news is breaking. I'm going to pause again for other questions. Alex?
Yeah.
What are the best methods or strategies from taking a company or executive that's just appearing on for earnings or investor day to becoming more of a thought leader contributor to those larger macro stories you referenced?
Well, if they're comfortable doing TV, if they want to do it, that's like number one, I think. And I was also going to say this word, long-winded. Don't do long-winded, because this will make sense, and Julie can talk to this too. Probably one of the worst mistakes that executives do in interviews is they think they have to keep talking. And these are 5-minute interviews. And I can't even tell you like the amount of anger from producers who are like, stop talking, because our talent, like Julie and the CNBC anchors, want to ask follow-up questions. And there's a big mistake sometimes when these executives do interviews because they think, let me just keep talking. And that is like the worst mistake that you can do. And you have to just say your thing and then pause.
You don't want to be too short either, though.
Yes.
Obviously, it's a balance.
But sometimes they don't pause.
Yeah.
And they have to pause.
Long is a much more common issue than too short. Yeah, so that, and if they want to be a thought leader in a given topic, I mean, they should just be prepared for those questions. And you can also make it clear when you're pitching that they are willing to talk about certain things. And it helps if they have a point of view on that given thing that the person knows about in advance. If I don't know to ask them about whatever it is, then I'm not going to ask them, right, necessarily. So that helps us also.
When you say a thought leader, you just getting them booked regularly on broadcast? Is that what you're saying?
Yes,
Yeah.
rather than just straightforward earnings readout.
Right.
Sometimes CNBC will have CEOs or other people literally in the studio on the desk as kind of a guest in a way. How do you decide when somebody rises to that level?
Well, also if they can speak to a newsy topic,
yeah,
that's really helpful. But a lot of them don't.
Yeah, most CEOs are not comfortable with doing that. I would say it depends on the person and how good they are at it. Really, to be frank.
That's why I referenced that Palantir interview. Like he'll just talk about anything. He doesn't care.
And you like that?
Yeah, of course.
He's great conversation. Other questions? I know you have some. Okay, more from me. Producer, on-air talent. When is the right time for people like us to call the producer or call directly the on-air anchor, talent, reporter? What's your answer, Jen? Sorry.
Well, I was just going to say, again, since we're a small operation, most of the time people can reach out direct. I mean, it's sort of interchangeable. Like I do a little bit of everything. So it's probably more relevant to ask Jen where CNBC is a bigger shop to figure out who to reach out
Yeah,
to.
I would say to always, if you have a relationship with a talent, that's fine to email them, but always CC a producer, because a lot of times they are besieged with emails and things get missed, and producers are looking for content. They need stuff to fill up shows, and so they're more likely to respond.
CCing is a good idea. That's true.
So if it's an exclusive situation, you have some news breaking the next day, you want to call and line up either Yahoo Finance or CNBC. When is the right time to call? How much before should you call to line up? 2 days before, the night before?
As much as you can.
Yeah, yeah. If you know it's, exactly, if you know it's happening a week from now, send it right away, because they build their shows, way in advance, and we'll put things on the grid.
But P.S., do not reach out to me a week in advance, say, I have big news coming, and then the night before, it's like, you're rolling out a new burger or whatever, right? Like, you have to have
Pumpkin
some judiciousness about, no, it's, like, it's definitely happened, right? Where big news coming, you're gonna wanna talk to this person, and then the news comes and it's not that big, right? I know it's big for the company, right? I get it, but it doesn't necessarily rise to, or if they're gonna come on then to talk about that, they better be willing to talk about other stuff also, right? And not just that thing.
So in person versus Zoom, does it even matter?
Yes.
Or do you pick some guests where you say you have to come in person for this to be newsworthy?
No,
So you're open to either one?
we're open to either one.
We're definitely open to either one. I'm never gonna say we're not gonna do the interview if you don't come in. 100% would prefer the person be sitting next to me.
Oh, so you prefer in person?
I'm not gonna, again, like if the person's available by Zoom, fine. It is so, I mean, think of, like, guys, let's be honest, right? Nobody likes to do Zoom if it's somebody you actually want to talk to. It's like, what if imagine if we were doing this panel via Zoom versus us doing it like this with all of you guys here. I mean, what's better? Come on, it's just better.
Yeah. So I would say this. I would say yes, in person, but Zoom is an acceptable way.
And Zoom has increased accessibility enormously over the course of the pandemic. It was an amazing tool, right? To be able to, to not have to book sat lines anymore.
Right.
Is to people not to have to drive to a studio. It's fantastic, right?
And if they're flying into New York from someplace else, they better have other stuff going on.
Because they could get canceled.
Well, because it's terrible. Because that has happened to me before, where someone has flown in and I'm on with some frantic person, and they're like, "But they flew in," and I'm like, "But don't have them fly in for this, because this can happen, that they get canceled."
They can come to Yahoo Finance if that happens.
Cowan, thank you. Nice seeing you all. What's your tips for preparation? What are best practices there? And secondly, how do you know if somebody's done a good job or not? Like, what do you measure? Are there any thoughts on measurement? Third question, what about the right dress?
Oliver's been stacking them up. What's the last one, sorry?
Colors and dress. And all the producers also have different standards.
Says the best dressed man who comes on the show. Right?
Producers have different standards for also the Zoom background stuff too. So, would love.
Do not use the fake background. Blur it, fine. Do not use the fake background. I saw somebody post today. I guess somebody was on CNBC this morning in their bedroom. Don't do it from your bedroom. Or blur your background if you're going to do it from your bedroom.
Don't show the pillows.
Right? No, it's just it's just not. So on that last point, like, I don't think you have to worry about too much what to wear, right? I don't know. I don't think about that as much anymore. I don't know why.
Yeah, I think maybe solids. I
mean, I wore this today.
No.
Thanks a lot, Jen.
I don't know why. Actually,
but that is the traditional thing that you wear solids on camera.
Traditional,
it's true.
But you know what? You're right. It's kind of all changed now. I think it's sort of just.
Stripes can be tricky because they moire. Would you guys all know what moiring is? Yeah. It's like you get this like strobing effect if you wear certain patterns. That's true.
As far as preparation, I think, again, the emphasis on conversation, right? Like, just, if you're just able just to have like a natural conversation about something.
And to Jen's point earlier about not going on too long, you want to have your points that you want to hit, right? I mean, as an analyst, you guys always have those points that you want to hit. And it's also better for us if you have a point of view, right? if someone feels strongly about something, that is always helpful for us. That's a marker of a successful interview. If I come away with the interview with a headline, I mean, that's the world we live in right now, is you want to have that headline that this is what the person says, or better yet, headlines, right? Multiple things that are interesting that the person said. I mean, my marker of a successful interview is if we get to commercial break and I look at my co-anchors and I say, that was really interesting, or that person was great, and it's energy also. You want to be peppy, right? We have, there are definitely people who are very even-keeled and come on and will say, well, the content was great, a little low energy. I'm being very honest with you guys here. Ideally you want someone who has good energy and who has kind of pithy, interesting things to say.
Exactly.
And so how do you prep for that? I don't know. Drink some coffee before the interview, right?
Edelman.
There you go.
PR
That's
people.
true. That's how you prepare.
But not too much, not overly scripted.
Not over, and not long-winded.
Other questions? I've got a few more.
Oliver, do you have any more? No, I'm just kidding.
Down there.
Hi. Executives go on programs because oftentimes they have a topic they want to talk about. So they're prepared, you're prepared. But oftentimes reporters and interviewers go off script and ask questions that executives aren't comfortable with, whether it's labor or supply chain or things like that they weren't prepared to answer, nor do they want to answer. How often do you go there, and how do you decide if you should go there, not to go there? How do you kind of feel the temperature of the room to know what to do?
That's a great question. Julie, and then I'll answer.
Here's what, again, since I'm being very honest here, tough. If there's things that they don't want to, unless it's like, I don't know, they need to be prepared to talk about everything. And if they're not prepared in this environment to talk about labor and supply chain, that stuff, like most of what we're going to ask, even if it's not something that was specifically it's rare that we're going to ask something totally out of left field, right? It's stuff that's the topic of the day. What are input costs looking like right now? How much are you paying your workers? Are you having trouble finding workers? How much are you raising prices? So they really need, and this is stuff like, I can't imagine that an executive would come on who hasn't had to talk about that internally, right? This is stuff that they're dealing with every day, I would imagine. It's rare that there's like a real curveball that what I would think of as a real curveball that we're throwing at people. We're not trying, I'm never trying to gotcha somebody, ever. That's not the goal. The goal is, if I'm an investor in that company, what do I need to know about two things. What do I need to know about what's going on with the company, and what can the company tell me about what's happening in the bigger world?
So when I do notes for the anchors, I want them to mention whatever they want to talk about and promote it, and I'll star it. You got to mention this, because I want to be good to my people, right? Because I want them to come back for more interviews. But exactly what Julie said, they have to talk about anything. These people are CEOs and running things, and so a little supply chain question, that shouldn't throw them off, right? They should be prepared to just have an answer and say something, but not be a scaredy cat.
Other questions? Oh, down here.
What will ensure you don't get invited back?
Usually we give people a second chance, even if the interview we don't think, this is kind of like the opposite of Oliver's question. How do you walk off and know that it didn't go well, right? I would say the number one thing is kind of what I mentioned before, sort of an obliviousness, a salesiness to an interview is a real turnoff, because it feels like you're not being real with us. But we usually will give people at least a second shot, even if the first one is not that successful.
I would totally agree with you. And if you, I think this is the fourth time, but the long-windedness that I mentioned, because I've had interviews where they've just talked and talked and talked and talked, and then the anchor is like, they want to kill them. Sorry, I'm being so.
I mean, the other thing is if the person says stuff that's wrong, right? But like usually CEOs are not going to come on and say something incorrect. It would more be a pundit or something would say something that just doesn't make sense.
What about timing? So in investor days during a single day, you can do an interview before it starts, during, at the end of the day, or even the next day. Presumably on the same days is relevant. But are you open to executives doing interviews the following day or a day later?
Yeah.
But I would think, like, what's the criteria for that? It just depends on how interesting.
Yeah, because again, like, no one really cares that there was an investor day on Tuesday and you're doing the interview Wednesday, unless there's major news that came out before, right? So you want to time it that it's, if they do have news, you want to time the news as possible, because if it comes out and then it's out and then they come on the next day, it might feel a little stale.
Okay. One other question. Sometimes with a company, you might be reporting news that the company doesn't like, or either the information that's being focused on or whatever. What's the recommendation to the company for how to is that something they should address with you, or should they tread carefully?
We were talking about an example of this beforehand with one of my colleagues. I like it when a company reaches out when this happens, because it shows that they were watching, which is always nice when they're paying attention to what's being said about them, and it opens the dialogue. It continues the relationship. If they can say, like, I heard what you were saying, I didn't think you were being fair, or I heard what you were saying, fair, but like, let me give you our side of it. It's actually quite helpful, and who knows, you might get more coverage out of it in that case, or better yet, I heard what you were saying today. I'd really like the CEO to come on and give our side of the story. I mean, that's the best case scenario.
Mm-hmm. I had an experience, I think, last year with a company, and there was a lot of news coming out, and we were working with the company for a long time to try and get the CEO to talk, and he was going to come on, and I mean, there was, numerous discussions, and how do we make you feel comfortable? And I don't think they did him a service by not coming out, because he could have just, set the record straight, or, but they just couldn't deal with it. And so I think it's always great to come out and do something, if you can, if they're comfortable.
I think we talked about this example actually on when we had our pre-call. Dan Springer, who was the CEO of DocuSign, who has since lost his job, but in the spring and into the summer, he would still come on the show, and he would acknowledge it was a tough time for the company. And I really respected that even though clearly the company was struggling, he would come on and he was frank about it, which I thought was, unfortunately, it didn't turn out so great for him professionally, but it was great that that had nothing to do with him coming on the show. But I think that was great. He had integrity for coming out and doing that.
So a few key takeaways. Relationships matter. Definitely engage, right? Don't be long-winded, for sure. And if you're a good interviewee and you're not not boring, that's a good thing, and you might have them back.
Yeah.
This was fantastic. Thank you for your time. It's a real privilege, treat, honor to be with both of you. This is actually the end of the event. I want to thank everybody here for coming. We actually have cocktails, I think, on this floor, if I'm not mistaken. And I hope everybody has a chance to join us for cocktails. I hope you'll be able to join us too. But really, really thankful for your time. Really thankful for everybody that could come, and hopefully the day was a good event for all of you. Thank you very much.
Thank you.